Oh, yeah, somebody's coming in here. You guys are all coming in. Sweet. All right, hold on here. Can't believe you guys are showing up this morning. I haven't seen you guys in a few weeks. Can you guys hear me this morning? I think you can. Good morning. Let's say some good mornings. Stonks Anonymous is here. Right on. James Rowland, Sid, Marcus, Chan Su is here. Dio, Clapton, Gil, Fisted, John, SP, Matthew Poots, Daryl's here. Nintendo Master. Stonks Anonymous, good to see you, brother. Stay Humbled is here. Sunspot Binky, what up, bro? Shit Slammer's here. Matthew Poots, Matthew Phillip, good morning, brother. Gerald's here. Who else is here this morning? Gary Schultz, RS, DR. All kinds of people are here this morning. Fuck yeah. Well, I shouldn't have said fuck right in the first broadcast. I'll be demonetized. Kind of crazy, right? I'm going to turn this off and get right into it. We're going to get right out of there. We're going to get right into it this morning, okay? We're going to do a little some chatting this morning. Good to see everybody. Everybody's here. It's really nice to see everybody here this morning. Garrett's here. Steven's here. Jose's here. Zavanko Mars Soccer 321's here. And Winky's here. What up, bro? Good to see you, Winky. Chansu's here. Old school subscriber followers here. Stonks Anonymous is here. Who else is here? Zach Burton showed up. Hut showed up. Dan Brislin showed up. Gary Schultz showed up. All kinds of people are in here this morning. Right on. All right, let's get right into it real quick. We got a bunch of stuff to go over this morning. Just off the open this morning, we're gonna go over some stuff here. My rig is kind of, every time I turn my rig off, it wants to like re-update for a half an hour to an hour. It's been out for 3 weeks, so my computer's not happy this morning. I'll get Trade the News up here, up and running here in just a moment. I'll log into it. Just briefly off the bell, there's a few things for you to be looking for. I want you to check my cursor over here. You can see this nice resistance above here at 3,200, okay? This is 3,206. I've got that tagged there. There's some more resistance, which we just bounced off at 380. We talked about this earlier on Twitter. So right here at 380, we had another band of resistance right up in here, right? So you can see that resistance down below. You can see down here we've got some support. It starts at 377.05 and then heads down to roughly, let's go back here. Heads down roughly, it's actually coming up. It was at 375 earlier. You can see it right here. And you can see some of that support. And you can see it comes all the way down here, 375, 375.65 or so, and then 377. So we're going to throw some, this is just intraday stuff over here, right? So we're going to put 377 here. Right there. We got this, we'll talk about that later. We got one more over here, so we'll put one more little bit of support down here. This is the original support off the bell. Put that one right there. Kind of diddle in the middle, right, for the open this morning. I'm going to take a look lower. You can see down here 370 is a decent band of support. You can see this. This is scary 360, right? So we know if we trail off during the day that we can come down as deep as 370 today. We have like magnets, right? Think of the market as magnets. We've got supply. We have demand, right? We know that real demand is at 370 for the day and for the week. Unless we have some bad news, some headline news, right? So a tendency to trade down here at 370, right? Intraday, this is our trading zone until we get some news today, right? So let's call it 375, real support at 370. And then we've got some resistance above at 380 intraday and 382. Now, for the day in total, I'll show you a different screener for that, how high we can go depending upon the news that's coming out. But intraday, probably call the top somewhere around 385, okay? We'll take a look at that on Bookmap as well. We'll look higher, and you can see that resistance has come down. There's some gray in here. You might not see it on your screener, but there is some gray hidden back here. and there's larger bands above. You can see it now, right? All this resistance coming up into 391, 392. You can see up to 395, and then 400. This on the week is more than likely top. Last night we talked about this, right? I made a post on @CaptainsAlpha letting you know that somewhere up in here we should have a failure around the 400 mark. We'll talk more about that later in the afternoon. If we get good news, if we get 50 BPS, if we get the puts rolling off into the OPEX. I said you last night we typically don't trade up in OPEX. We can trade up into OPEX. I'm not against us trading up in OPEX to 400, but there is some issues this week in particular with this quad witching, where the last Friday to this Monday they're holding puts right to the end, to the bitter end. They're holding them right into the end, and we've seen some more hedging come into the market. Not a ton, but enough to just pin the market. You guys have noticed that we've held options overnight a couple times this week. I think Friday or Monday we did, then last night we did, and you can even see the subdued opening. Right, you're not seeing us going up 50 points in the overnight and then blasting off from the bell. You're seeing us go up. It mutes by the time we open. We're up like 20, 30 points, and then we start to sell off. This morning we didn't sell. We got a green bar in the open. That is to be expected this morning. But at the same time, we're not legging it up right now, right? We're not over here. We're not over here just legging it up this morning, right? Bam, 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 bam for three banging shots higher, right? We're not doing that off the bell this morning. We can see that there is still pressure on the market. So we'll talk about that as well. They're usually on FOMCs. Usually on FOMCs, this is honestly the most FOMCs, right? You're going to see us trade higher, find a zone, right? There'll be some form around, I believe it's 2 o'clock, of weakness, right? We'll go down drastically, and then we will either trade higher, right? This is if we got good news, or we will sometimes spring higher to grab short, and then we start to trade down into day. Even on good days, good FOMC days, we tend to, let's say we have that weakness there, right? So we trade up here today. Let's see up to this 382 in intraday trading. Let's just say we trade in this zone here today. You usually see some weakness heading into the FOMC statement. And let's say it's a good statement, right? And we trade higher. And then right around 2:30, J-Powell's speech starts, and it gets ugly. Normally we get some ugly questions. He fucks it up. He does every single time. And we start to trail off into the close. Now, there's different reasons for this, but the first reason is this. You got banks that are going to the banks are going to want to bring it back so they can take the trade. So we might see some positivity in the days leading thereafter. But the event risk is over, and also the trade is over, right? The volatility of the trade is over. There's compression of volatility. So you really want to capture this trade here today and take your money and run at some point. So if let's say we trade here today, keep in mind, right? Let's say we have that weakness at 2 o'clock or leading in at 2 o'clock, right? You want to be out of this trade at some point today. You want to be looking for some weakness to grab a bottom. You want to run this up if the news is good. And if the news is bad and we run it up and you want to take short, you're going to not take short here. You're still going to wait for, if the news is bad still, you will still see some kind of a move down, a trade higher, and this is where you would take short to take it down, okay? If you were long coming up here, you still take your profit here, okay? I want you to be aware of that because this is a common occurrence on FOMC. You'll see this kind of a move play out. And then later on in the week, you'll end up seeing a trade higher or a trade lower, depending upon, the trade lower would actually start typically in this FOMC into Friday. If it's a good FOMC, you'll normally want to take your money and run here. Sometimes it'll go right into the bell, let's say. Let's say it's gangster. It goes right up into the bell here. And you would be thinking to yourself, I'm going to hold these 1 dates or 3 dates right into this next day, and we're going to blast higher. Typically, you'll see is a fall, and then we'll start again for the next leg higher if it's bullish. So remember to be closing out your trades as we move as the day or as the event is over today. We'll trade this together as the day moves on. We're seeing a little bit of weakness in the SPY right now. We know we've got the support down below here at 377. We'll move back down here. Hang tight just a second. Just a second here. And you see some of that support is kind of disappearing here. You might get a little bit more rollover. We still have that 375 mark down below in here. And this is what I'm going to think your trading range is, okay? So if you didn't buy the open, if you didn't buy the yesterday open, where are you looking to buy today if you're a bull? What are you looking to sell? You're looking to sell these upper bands into 2 p.m., 380, 382. And you'll be looking to buy these lower bands down below here, 377, 375. And you can see it with my cursor over here, 374.95. So if you're not in anything right now, you want to day trade this as we lead into 2 p.m. And we're going to put some marks in here. See if I can right over here. We're going to put a vertical bar in somewhere around 1 p.m. just for some pre-warning. Right there. Put another vertical bar in over here right around 1:30. Right there. And we're gonna spread these back out again. See what you guys are talking about real quick. And then we got a whole bunch of stuff to talk about. Hold on, let me see what your questions are over here. What is good and bad? How would markets react? Yes, good and bad. Hard to tell right now. I fucking love all you guys. It puts our gain in some life. Okay, so what's good and bad? That's a really good question right now. We need to talk about that. We'll get into that. We're going to get into that today. We're going to talk about the market being broken. It's important that we talk about the market being broken. It is broken. The market is broken. The market is setting up for further decline over time. You know from my last live stream that I did with you that I talked to you about. Let me bring this over here. So I've got a bunch of different computers. This charting is from the last live stream that I did. And this last live stream, I talked to you about a failure here, right? We talked about there being a failure between 410 and 430. In the overnight, we got a 420. We got 420 on an ES overnight over here. So you could technically say we got right in the halfway mark. We still rolled and failed down here. Hold on here. So this big failure down here, right? We knew this failure was coming. There was nothing surprising about this. I think accounts blown up, and I even talked and we said, this looks like distribution. This looks like it's coming down. We knew that this would fail at some point over here. So let me close that up real quick. And we've got larger issues. Let's see if I can turn that off. On a longer time scale, let me actually turn that back on again. On a longer time frame, let me put this vertical bar in here. Move this over to the 17th. I don't know what's going. Oh, I don't know what's going on here. Got some wonkiness going on here. So you can see here, right, in this longer time frame, that we had this break. Okay, you can see this nice break that we had. We've stayed in this channel. All right, we haven't been able to break out of this channel. This is news dependent, headline news dependent. Ukraine war, right? News dependent on the Fed making a different shift, right? Without that shift, we are trading inside of this channel, right? And this larger channel, if we look on this larger channel, it's actually not on this one. There it is right there. See this larger channel down below here? And this larger channel, right, brings us down into, see my 320 down in here? It's pretty nasty. It's really ugly. Nobody wants to see that 320. You start to see these downward projections, right? You got 320 here. You got 360 here. You've got 358 over here. You see this break that we had down below, right? I can see if I can bring this back. You can see this break that we have here, right? If we don't have a change from the Fed, right? If the Fed doesn't bring in a Fed put, we are bound to fail again higher. We know we got some gaps to fill above here at this 400, somewhere in this 400. So the expectation would be if the Fed increases our rates, right? If the Fed if he's pulling forward, we're on track to still trade down in a larger time frame. But if the Fed pulls forward, we go up to 75 BPS or 100, or it says we're not pulling forward, just adding another 25 BPS to the already 50, we're still on track to trade this market down. So you're going to expect, even if we fill a gap, for another failure and for us to trade down over time into this 320. Same as before, same as before, same on a larger time frame. Going back into January, and then we will continue this downward trend over time, right? That this trend, this rollover here, this distribution, right, is going to continue. Where does it end, right? I guess some of your bulls are going to think, oh yeah, we're just going to trade up here, Cap. We're going to go all the way to 420 and then roll this over. Something like this. Hey, Cap, we're going to go back up here and try to grab that 450 and then roll it over. But none of that's really happened. We've stayed on track. You can see these marks here. You see this mark here. You see this mark at 370. We didn't quite get to 360, but we are looking to trade this down for this failure into July. Get down to this 340. If it takes until July, right, it'll be 340. If it takes into August to get down here, it gets down even, or maybe that's 360. And then down here is 340. So eventually you keep rolling this down. And at one point there should be a break. When you have these bottoms down here, that's that capitulation break, right? We haven't seen that, right? We've stayed on trend. We are at some point going to look for that capitulation break. So that could come today. If we get an ugly FOMC, there's nothing to say we don't get that final capitulation break and then make a nice bull run higher. But we haven't seen that yet. We haven't seen that down below. We haven't seen it here. We did see a lower low over here. This is not healthy. We saw this massive break here. This right here is a market break. We are in a bear market now. You know that, right? So nothing is saying that we're trading higher. Nothing has said that since January. There's nothing on the bull side saying that we're trading higher. This is the fucking bottom of the market. There's nothing saying that. Unless we have a Fed pivot, unless you have Ukraine, if you have a cessation of war in Ukraine, you're gonna possibly see that. You might see a 300-point run, but we're still coming back. And a break of Ukraine news breaks that they have ceased hostilities and a truce is there, and they're going to reopen trade. That could be a bump to the market, but it still doesn't change the fact of a Fed pivot. Until you get the Fed pivot, a Fed put of some kind, or we break something, there's major damage done to this market. Unreal major damage done to this market. You gotta see that you've got hedge funds that liquidated. You've got banks coming into an end of quarter rebalancing where you've got large players that lend liquidity to the market that are not going to lend it into this rebalancing. They don't want to risk their money. You're going to have portfolio managers saying, give us your money, and they're going to say, you're fucking crazy. You already see it in the crypto market, right? You see large players pulling their money out of the crypto market. These are all warning signs. Now, some people will say, as people are selling this blood in the streets, you should be buying. I don't disagree with that. I'm actually in the camp of buying. If you're buying stocks, that this is one of the places. You'd buy around 360, 370. You'd buy again somewhere down in the 200s and buy again in the 160s until you see an actual turn in the market and then dollar cost average. I do think you buy down here, but I think your view on the market is still bearish. You've got housing crisis that's probably coming down the road. You'll see layoffs at some point. You'll see capitulation of you see companies closing already, right? You see layoffs, and yesterday you saw layoffs in these large housing companies. Carvana, I went on their website yesterday. I had tried to sell. I have a Cadillac Escalade I was going to sell I don't know, it was last summer, last fall, and they were offering me stupid money for my Cadillac. Stupid, almost double what I paid for it. Triple on one of my Teslas. It was insane. I went back yesterday to check Carvana, and they were offering me a quarter of what my vehicle was worth. Not because the vehicle is not worth it anymore, but because Carvana is collapsing. Other companies were offering me the full price. These are online companies, car companies. You're seeing real estate firms like Redfin go down the shitter, right? We all know that Redfin's not a real estate company. So you're going to start to see these companies fold. You're already seeing tech companies saying that they're laying people off. You see crypto loan companies saying they're going to lay people off. So just be aware of that. I want you to be aware that I'm old enough, believe it or not. I lived through the 2007, or not lived, I was an adult, a young adult in 2007, 2008 crash. I was living in a very wealthy place. I was living in Vail, Colorado. And it was, when you saw the destruction as it took place, I remember the day when I remember the weekend where Enron collapsed. And Enron owned like a neighborhood, this whole neighborhood, outside of Vail, and the next ski resort over. As you go up the ski lift, you take this limousine up, and then you take a ski lift up, and they give you hot cocoa and cookies and shit. But in the restaurants and the bars, like, people were buying, like, you'd buy just bottles of Cristal. You'd buy shots of Louis Trey for everybody. You'd be drinking huge bottles of French wine for $2,000, $3,000, $6,000, $9,000, $13,000. All that went away. The resort became quiet. It was like middle of winter. We're all waiting for this big weekend, and it just got quiet. You knew then that something had broken. And another fascinating part of Vail, Colorado at that time was you saw someone else get hit in the another class of people that got hit. These were upper middle class. Let's say call them middle class to upper middle class, but like real. In today's dollars, someone making $300 to let's say, yeah, anywhere from above $150,000 to $300,000. It's not your baseline engineer making $100,000, $120,000. People making like $150 to $350 today, maybe even $500,000 a year. Those guys, those women, they used to be the client, the lower end clientele of Vail in 2007, 2008. They went away. And the ultra rich calmed the fuck down. These are the old Nantucket red rich. All the nouveau riche, gone. All the middle upper class, gone. And then you saw new people coming in. You saw Vail even geared their advertising towards, hey, are you a family? Are you a nurse? Do you make $90,000, $100,000 a year? Come to Vail. And you saw a lower class, believe it or not, of middle class coming to Vail, and subdued old wealth. But all that higher middle class, that new rich, gone. And we haven't seen that yet. I travel now. I go on vacation. This motherfuckers still have money. Sorry for swearing. These people have so much money to burn still. And you really do want to see companies, this is horrible to say, but you want to see companies closing, companies tightening, companies, you'll hear companies saying we're focusing on our main products. We're not going to launch this. We're not going to launch that. See a little bit of bounce down here in this 377. We'll see if this holds. I do think we trade down here to 375. You will see though, you will see like less job opportunities for people with skill sets that are higher than, let's say, a nurse. You're talking about like an engineer that works on specific problems versus I'm just a mechanical engineer, right? I can get a job anywhere. You want to see less job openings, competition for these jobs. You want to see the fat get cut of engineers that aren't doing their job. You want to see the fat get cut at these companies on what they're producing. Focus on what their core is, right? And you want to see this because you want to see you want to see demand destruction of housing. You want to see demand destruction of goods, high-priced goods. You want to see demand destruction, not so much on like the milk and the eggs and all that kind of stuff, but on luxury goods. You really do. You need to see the price of stuff come down, and you're not going to get that demand destruction unless you take the money away from people that have excess money, and that's not poor people. These are new rich people that are getting paid obscene amounts of money for what they actually do. And when we see that happen, you're going to start to see the market start to shift. You want to see that bottoming of the market. So until we see blood in the streets, until you start to see neighborhoods where we've got too many sellers, not enough buyers, where you're seeing people complain about jobs or people that make more money than maybe some McDonald's worker or a nurse or a mechanic. You want to see them complaining. You really do want to see that. Yeah, you want to see people have some fear in professional positions. It sucks to say that. And it's funny because people say that doesn't really happen, and it really does. Cyclically, it does. If you're old enough, you know that it cyclically happens. It's important to know that it happens if you are in one of those jobs, that your job does get cut. It is on the line. You can see it in lower class jobs, but in truth, the destruction when it happens. There's a couple movies on that stuff. They don't do any justice, truly, to how ugly it got. Matter of fact, my dad went through it in the 86, 87 crash, and it was overnight. It was overnight. I think I talked about this once. My mom and dad had never spoken alone in front of us, kind of. We never fought, none of that stuff, right? I remember that they left our home. My father was like, I have to speak to my mom, and they walked outside up into a hill. This big green grassy hill across, we had big woods outside of our home. And they had this big long conversation. I remember them fighting. And my sister and my brother and I were watching them fight outside from this big bay window. And we're watching them. And my mom was crying. My mom was devastated. You could see my father's not Superman anymore. And what my father at that time had been telling my mother was that they had to sell their homes. They had to sell the one that they have forever home. They had just finished a renovation in this house. We had brand new everything. New vehicles. They kept one new vehicle that he'd paid off. But like my mom's car, anything we had credit on, gone. And we wound up moving as well. We ended up selling all of our homes. We had everything. Anything. We were upper class family. This was back in 87. And life changed. We lived a different life until matter of fact, this lasted into once my sister, my brother, and I all left for university. Did they get some kind of and of course the economy had come back at that point. So to think that doesn't happen is absurd. If you're out there listening right now. Yeah, mechanics thrive in bad economies. As a matter of fact, anyone with a specific, like there's a middle class worker that thrives in a bad economy. They do very well. You would also do very well if I give any of you a suggestion out there. If you are a worker that won't have job destruction, save all of your cash. Like save cash, because you will have the opportunity to buy in, especially if your credit's not destroyed in this cycle. If this is a short-term debt cycle, if you live frugal, if you wrap up your credit, if you've got variable rates anywhere, pay that shit down and save your money, because once this destruction comes into play, when this should take place in 2022, 2023 into the beginning of 2024. When we get into the ugliest portion of it, right, the real true blood in the streets, not the bullshit from CNBC, you should have some cash stacked. Today's dollars probably say no less than $100,000 to $150,000, upwards of $250,000. You'll have two great opportunities. You'll have one great opportunity, an opportunity of a lifetime to buy the market. Again, to buy the market at a huge low. This is something that'll set you up until you're ready to retire. And your second thing is probably the biggest investment. Now, I know there's a bunch of arguments against this, but truly, our tax system, our entire economy is based upon you buying a home. If you can buy one when this market shits the bed, and I'm not talking about a house that's $500,000, it used to be $250,000, and you buying it at $300,000. I'm talking about a house that was once $250,000, maybe it's now at $500,000, and it trades at, or it sells at $200,000 at a real discount, at a discount from when it started running up, and with cash. No bank's gonna, even if you have good credit, no bank's gonna want to give you a loan. But you want to have hard cash in your hands, even if you got great credit. They're gonna give you a loan. They're looking for cash. Everyone will be looking for cash, and if you have that cash on you, they will take it. And you will have two things, right? You'll be buying the bottom of a market, and you'll have a house that's reasonably priced, and you can run it up into the next peak that we have, right? And you'll stick around and follow guys like us, and you'll say, where's the top? You'll follow a bull as we get a run higher. That doesn't tell you that we're never gonna have a top. You're gonna follow a bull that knows where the tops are, right? That doesn't buy tops, that buys bottoms, sells tops, that kind of stuff. I think it was Perina or someone on Twitter said something about it yesterday, where you take profit. It's crazy. I've got videos from September through December. Every one of them. Take your fucking money off the table. I've got a Twitter history going back to winter of 2021 saying, I'm not buying stocks anymore. And then begging people that were the stocks that didn't get clipped, like the Apples of the world, to finally divest of those last 4 or 5 stocks that the Fed was holding up with corporate debt, with corporate debt bonds. So you guys can time this, believe it or not. But be aware of this as we move forward. There's nothing in this market saying that we're not going to continue to trade this down. There's some arguments. There are bull counts out there saying, well, in this part of history, we actually traded up to a new all-time high, then we rolled it over. We can do that. We can trade that all the way up. But as far as buying this market, you're looking for about 3 big lows to buy, and you're looking, and even if we reverse, usually when we do reverse these markets, let's say I want to show you guys something. Because I do see some people out there saying, well, we can reverse all this even now, Cap. Smart people. What they're not telling you is that even if we do reverse this higher, so we come up here and reverse this higher, it typically fails just above this previous high. So you still would have done better buying a low here, and you're still going to come back down to an even deeper low. This would be your second buy over here. This is down at this is somewhere in the 200s. And then your next one being the, believe it or not, 160 to 200 would be your third buy. So you can buy down here, but just you've got 3 viewpoint or three ways that you're seeing the market, right? I want you to have those 3 things. Let's say you're like, hey Cap, none of that's happening, Cap. We're gonna come up here, beat that high, and then rocket ship higher, right? Can't show this on my screen. We're gonna rocket ship higher. Okay, so you bought this bottom down here. You don't get the other 2. You still are waiting for confirmation, and there's nothing wrong with buying higher from this point. There is nothing wrong with buying and having bought this low down here. So you don't really lose at any point if you bought this bottom and 2 more below, or this bottom and some higher. Especially if we continue to go up for 3 or 4 more years. You lost nothing. The only way that you lose is if you buy this bottom and you hold it and this fails, right? And we go down 2 more times. That's the only way that you lose, right? Maybe you kept buying up here, you would be losing then, I guess, because then you'd be a buyer up here. So you're going to buy this bottom, wait for 2 more, and then confirmation higher from there. That's the only way that you win as a bull here. It's the only fucking way. You can see that retail buyers aren't coming into the market in force. You can see it clear as day. You can see we have a break in the market, a real true break in the market. So just be real if you're a bull out there. Be honest about where we are. Be honest where the economy is. You'll hear things like, yeah, hedge funds and banks are going to buy this bottom, run it up, and you're going to get left behind. Sure, but for how long? The economy at some point isn't the stock market, but it does at some point impact the stock market. We're seeing it already. We've seen it since January. And we can trade this up. I got no problems trading this up with you. No problem trading up to 400. No problem trading up to fucking 500, 600. But the macro picture of our market is down. Over time, it's down, and it's not done going down at this point. We're more than likely to be giving back everything to at least, and I think that's 220, right? Everything back from the lows. We were at, I don't know how many of you traded before 2020, but we were heading into a recession then. We were looking at a recession. It wasn't like heading into the end of 2020 or to 2019 that people weren't saying, hey, look, we should get ready for the end of a short-term debt cycle here. There were some guys, some of them I forget, but Dalio was even saying we were at the end of a long-term debt cycle in 2019. So you've got if you guys look back like 17, 18, 19, we thought it was the end of a long-term debt cycle. That's even uglier. That's like a downturn for like 10 years. It's insane. So, and we're just a couple of years after that, and we're hoping that this is a short-term debt cycle, right? Not even the end of a long-term debt cycle. So just have some patience with the market and where we're headed. Have some patience if you're a bull. And truly, if you're a bull out there and you're a young bull, you really do want to see some destruction out there. Well, I don't know why you would want to be buying Tesla at $1,300 after so many splits. Apple stock, I think one Apple stock is worth like I could be wrong on this. It's either $16,000 or like $26,000 at one point. It was worth that much on one of the highs. It's been split so many times. So a lot of you guys don't realize, the new guys don't realize how often stocks have been diluted by shares, by share splits, just by pure dilution, that the value of some of these stocks that are out there before you even see them out there, right? Before you see like an Amazon at $140. Amazon hasn't had that many splits, which is kind of nice, but a lot of these stocks have been split multiple times. You don't want to be buying them per se at a perceived, these are cheap right now, but when they're really not. And you also want new tech to come into. There's so many things. Like we're going to small rain here. You guys need to be watching a video. I think I posted once a video on short and long-term debt cycles. Our system, whether you like it or not, is built upon and predicated upon a system that cleans out companies that do not produce when there's free money. So if we're handing out free money, which is a part of our system, and people are like, we shouldn't be doing this. We always should be doing this. We hand out free money so that companies that are producing new products, more efficient products, have the money available so they can expand and grow. In that process, we get bad companies, we get hucksters, we get futurists that don't actually have the tech for what they want to see happen. Right? They'll take that money too. We've got scammers that take that money. We also have companies though that have products that are great that still fail. They're just not applicable yet, or maybe they never will be scalable. So you have to clean those companies out. You also have another problem. You've got people out there that you might not know this, you might not believe this, but you have people out there that take these loans, grants. They sometimes start these companies. People that get loans for homes they can't afford are getting paid too much in their jobs. They have a job that's bullshit, and they get swept up in these in these free money cycles, right? And you might know him. You might know a guy out there, and you're like, wow, he's everything, or she's everything. She's what I look up to be one day. And what you don't know is in the background, they've done the same thing that some of these companies have done. They've overextended themselves. They're driving 3 fucking trucks that cost $120,000. They got an RV. They got 3 houses. They got, I mean, kid you not, like they got like a vacation home, a ski home. They fell into some kind of a fucking trap with a timeshare. You don't know what they're doing in their private lives, right? They look like they're wealthy. They're out eating at all these restaurants. They're at vacations, going to Disney twice a year, Vail once a year. They're going here, there, and everywhere. And you're like, how's that guy do it? How that woman do it? Some of those people have to be cleaned out of the system as well, and it's good to clean those people out of the system. They've got bad credit. They've overextended themselves. And that also, when we go through this cycle, it opens the door for new blood to come into the market, for young people to enter the market, for young people to buy a home, for young people to get a great job, for young people to start a company. This is a part of the process of our capitalistic system. This is how the U.S. operates. I know some of you older guys and women out there know that, but I know a lot of young people, even into their 30s, don't really realize or never took enough economics classes to understand the ideas of how our system works in the United States. So this is all normal. If you're a bull, you shouldn't be like, yeah, this sucks, I hate it. You should, in the grand scheme of things, you should be like, hell yeah. This is going. Let me bring up Trade the News real quick in the background so I'm not just fucking talking to you guys all day long. Let me bring up Trade the News real quick. Hold on here. Hold on 1 second here. I need to bring up a just a second here. All right. Give me just a second here. This is really wonky. Hold on here. Having a really hard time logging in here. I think Trade News is having some issues today. iOS patch. Yeah. Just a second here. You guys will probably get, usually you get the news. Oh, yeah, baby. There we go. Can you get, let me know if you can hear Trade the News. I'm going to do a, let me know if you can hear that. Can you guys hear that Trade the News in the background? We'll talk about squeezes too today. You guys couldn't hear that? Tell me if you can hear this. Yeah, I don't hear it either. Have that same issue. Give me just a second. I'll get this up and running. So down here you've got 375, right? As a 375 as a bottom down below here. You can see some buyers stepping in right now. We've got no laddering down below. You still see this 370 down here. Talked about this being bottom for today and for until the event news comes out. We have nothing down below to 365 and 360. We've got clear skies down below. If we see any laddering come in, I'll let you know if we see that. But right now we don't see that. We see these two places here, 376. Let me take a look at this. 376.32. A little bit of leading down right now. A little bit of laddering lower. You can see some laddering lower to 375 lows. Just hang tight here if you're looking to buy a bottom. They might trade down below here to 375. Give me just a second here. I'm gonna try to get this audio up and running. Hang tight 1 second. All right, let's see if this works. How many of you guys hear this? Hey, good to see everybody. Buddy Mac, good to see you. Yeah, I want to know if I'm actually looking for oh, you heard it? You heard the pings? All right, hold on 1 second here. You guys hear that? Let me know if you heard that beep in the background. Did you hear you're listening to Trade the News? All right, hold on. All right, hold on. We'll do this one more time. Give me a second here. I'll bring up like a YouTube or something and see if we can listen to someone on YouTube chatting. We'll listen to Tom and Jerry. You guys hear Tom and Jerry? No. Do you guys hear Tom and Jerry going in the background? No? All right, so we should be good then. No. All right. You guys hear the cartoon? Okay, good. All right, so we should be good here. So Trade the News is on. Whenever they'll come on and start talking here in a little bit. They'll talk. They usually are faster than anything that you'll get on Twitter. They'll be faster than Walter Bloomberg when they drop the news on FOMC today. A little bit of a bid in the VIX right now. So we are going to probably look for a price target down below of 375. We are watching some laddering. So these are stink bids down below here. I want you to key into two things, okay? I want you to key into where my cursor is in the right here. See this 100,000? Now this is where usually where the real bid is, right? Anything about 100,000 or higher. If you see this bid moving down and about, you will, or down, let's say, it's pulling the bid down, right? It's putting in a stink bid. We'll put this regular. It's pulling the bid down into this 375, okay? You'll start to see these white bars come up down below. What this is also doing is showing you these are where the stink bids are. It's lower than support at 375. It's trying to pull down. It's offering demand, right? There's an algorithm, a computer out there that is offering demand, let's say at 375, and then it lowers it to 374 to get it to 375, if that makes any sense. The next thing you want to be looking at on this book map is see all this red here and all this green? This is going to show you who is in charge right now. More green, the bulls are in charge, right? We're at actual demand. Right now we're at actual supply. You see more red here than you do see green, right? Means we've got sellers in the market right now. They're in charge, okay? So we're going to take a quick look at that. And you see these black areas down below. It means that this is where the real buyers here at 375. So we're going to look for a tag over here at 375 for buyers. Now I used to have on my book map, I used to have a hero indicator. I'm not as well on this computer. I don't have it on. I've got it on a laptop, but not on this one. I have to download it, and I haven't yet. Long story. So I'm not using it on this computer. And I think you should be fine with not using it on this computer either. There's no need for you to. Sometimes the hero indicator doesn't show anything until later either. Anyways, plus we've also got we've got some other flow stuff. Hold on one second here. That actually tells a more accurate picture in terms of. Hold on a second here. I have some technical stuff I have to take care of here. Yes, I can actually. I guess that's fine. Did you guys hear that beep? I'm going to give you a market summary for this morning. We've got the market summary for this morning is global bond prices firmed up, led by European yields after the ECB had an impromptu meeting ahead of the FOMC announcement this afternoon. I want to talk to you about that real quick. On your own, you can look this up here. You guys on your own, you can look up the ECB prepares new tool to tackle rising borrowing costs in weaker economies. Bank signals it will buy more bonds of weaker Eurozone governments under an existing program. This is on Wall Street Journal. Look this up on your own. Give it a quick read. It's why we were strong into this morning's open. ECB officials reiterated their intention to do what is necessary to ensure policy is properly transmitted, including instructing committees to prepare a new anti-crisis tool. The Italian 10-year bond yield. Well, wait a minute. I'm getting some real screwiness today from getting some real wonkiness this morning from Trade the News. go. Trade the news. Their website's acting wonky. The Italian 10-year bond yield is holding lower by less than 40, equal to or less than 40 basis points on the day. The U.S. Treasury yields are modestly lower ahead of what futures are projecting will be a 75 basis point rate hike this afternoon. U.S. economic data was generally softer than anticipated, but did nothing to change the narrative coming out of last week's inflation data. Nucor raised guidance, citing robust demand, which may have provided a boost to sentiment, along with marginally lower oil prices overnight. And you guys are in puts right now. Your price target down below, 375.28. You might get down to this 374.14, but usually you won't see that. Usually you'll see this bid leave here as soon as we tag down below. So if you are short this market right now, we are coming into an area of support down below. So we'll take a look here. We'll see if there's anything showing up. You can see it all the way down here. This bid is all the way down here to 373.55. And then ultimately down below here to 370 is real support. So if you're a conservative bull, you could wait for 370, just sit back and watch as the day moves forward. This is interesting too. This is the CFO of Ford is saying that they're seeing an auto loan delinquencies increasing. Demand continues to be very robust. This is interesting to see. That Carvana stuff, man. I looked up Carvana last night. No bueno. Another note on this Ford news is that Ford is one of the companies that said they were going to stick with they used to car lots like Ford, Chevy, Toyota. They would keep their lots over full. They would keep too much product, and so have to give deals on their cars. And then during the COVID crisis, they, because of shortages, of course, and chip shortages, just vehicle shortages, they put premiums on their cars. So let's say a car's base price was $20,000, or let's say it was, with everything added on, was $20,000. They would add another $5,000 onto it, and they don't want to get rid of that $5,000 they added to that car. And they also like the idea of not negotiating down, let's say, from $20,000 to $18,000. So their point was, we're not going to build more cars and cut ourselves out of profits. This would force Ford and companies like that to go back to their old model of selling vehicles. This news. So this is against what they've been, a lot of these companies have been saying they're going to do, implying lower, not only from auto delinquencies, but just lower profits as well, because they're very profitable while they're able to have price demand. You see we have some dropping here, and you can see the bid being removed on the SPY down to 374.13. That's the price target right now. So we'll move this down here, 374.14. We'll see if we can get a nice drop down here. You can see it right here. That's still at 375. We'll put one more down below here. About there. Somewhere down in here. And you can see the laddering coming in now, trying to draw price even lower. Now we're down to 373.50. Pulling price lower. If you're long right now, we're going down. Well, we've talked in the past. A lot of these questions you guys are sending out there are questions I've answered 100 times. I want to answer. I'll go through your chat right now and see what I can answer for you real quick. And explain why I don't do ES. Why I do the SPY. But for today, for today's broadcast, I'm going to stick with. Unless we have to get some downtime, I'll get into some of the reasons why I use SPY, not ES. Mostly it has to do with jumping around stocks. and not futures, Globex. Hold on here, I'm reading some stuff here. Jersey Governor Murphy to deliver $2 billion in direct tax relief. Put this back here. Sellers still in control at the moment. VIX is catching a bid right now. You're going to look for and hope for a rejection at 34, though we could trade as high into... I'm actually going to put a price target right now on... I think we're going to trade down to 370. It's possible. If we don't get a rejection at $33 on the VIX, we could see the VIX trade as high as 37. You see, we see this. No, maybe 36.25 or so. Somewhere in there. Be careful here. We could be rolling the market over. Give me just a second. I want to check some options flow here. Some nice options flow and range expansion. Scroll through here, just take a peek. Put to calls, we've got 0.39 on puts. Put to call ratio is 0.391. Put flow 61,000 puts. Call flow 158,000 calls. Our bullish percentile is 79% bullish. Let me take a look at the structure here in the options market. Still light options flow. The bulls are winning, but it's not by a huge margin, not big money. I would say people are waiting to buy. I've got a bid on Qs, $2 million. SPY, a couple million. Tesla, a couple million. Let's see where these are dated. Some zero dates. Seems kind of early for zero dates. And then some targets out in July 8th on the Qs. Even the size on these calls are small, couple $100,000. There's $1 million call that came in at 10.54 for 6.15 for the SPY. 377. C seems a little early. Seems slightly early for that. Just a moment here. I gotta go through my screeners. Hey, everybody's quiet today. I've got a tweet deck up here, loaded up here. And Twitter is just deathly quiet right now. I'm going to go through. All right, here's what we're going to do. So I've got a price target down below. 375, 374. It's possible we could even roll over even deeper. You can see these sellers here. We could get a bid here. I'm not buying this. If you want to know, I'm not buying this. I'm going to look for a buy if 375 holds, possibly trade this up here for a quick rip. But if this 375 and 374 does not hold, would not be a shocker to see. Even now, it's 1127. If we don't, let's say we get a bounce off 375, 374, it would not be a shocker to me to see us roll it at some point or for it to fail, and for us to trade down into 370, heading into the FOMC statement. So I'll go through your questions right now and see what you guys are asking in the chat. What screeners do I use? I don't think I've covered that. What screeners do I use? So typically in the background, you guys see like me here, right? Well, behind where my arm, see my arm right here? I've got a screener right here. I've got a screener right here, a screener right here, a screener right here, a screener right there. And then I've got another one over here and another one over here. So I got 1, 2, 3, 4, 5, 6, 7 up right now. I should take a picture of it from behind while I'm producing the show. You know what? Let me see if I can get my daughter to do that. Hold on a second. So call my daughter and see if she'll take a picture. Maybe she can upload it to Twitter. So you guys can actually see what's going on. But you guys only see what I want you to see, I guess. So let's see if I can get a picture so you guys can actually see what's going on. So on my screeners, I've got Bookmap here where you can see the cursor. I've got a Webull up over here. And then on another screener, I've got Trade the News. On another screen, I've got Trade the News. I've got, let me see what else I've got over here. I've got another Webull chart up over here. I've got a Trading View chart up. Got too much shit up here. And then I've got a monitor for the streaming software set up above me to the top right. To my left, I've got TweetDeck open. Matter of fact, I haven't been streaming a lot because we'll talk about that at some point too. I'm not going. I don't think I'm ever gonna sell. I'm wishy-washy. I'm like, I'm gonna sell, or I'm being forced. Basically, I'm being forced into selling subscriptions. I'm just not gonna fucking do it. So I'll rely upon donations to fund the stream. If they get the support, I will restart streaming. But I'm not trying to take this private. I'm not ever trying to make money off you guys. If you guys support the stream, I'm more than willing to come back and do more. But support for the stream was falling off. Monetary support like donations and shit. So I haven't been streaming as much. My P&Ls are better when I'm not streaming. So the stream has to support itself in some way. But I'm not going to take it private ever. I'm just not fucking doing it. A nice little fat bid coming in here. They're looking for a bounce down below here. You can see it right here. Trying to catch this bid. There's some buyers that have stepped in. You can still see that the real buyers are still down below at 374. I'm still waiting. I'm not buying this right now. This is what I do when I'm not streaming with you guys. So, but it's the same shit. It's just I'm on Twitter, fucking talking to you guys on Twitter. So I'm not buying this personally, right? I'm gonna wait for this to come down. Watch my cursor on the left. Even though it looks like the buyers here, even if I miss this trade higher, right? I'll take the L on this trade. Too risky for my blood. I really want to see this capitulation down here for me to have feel confident. And then I'm looking at the VIX on another screener over here. So let's get back to the screeners. So on another screener over here, I've got the VIX. So I'm watching at all times the VIX. I'm watching a candlestick chart of the SPY. I'm watching a Bookmap of the SPY. And then on another screener, I've got TweetDeck open. We'll talk about TweetDeck in a minute. And then on the left-hand side over here, I've got options flow from Flow Algo. And that's more for, let's say right now, so like this is a good example. So right now, where we are, right here, right here. I'm looking at Bookmap, right? And I can see the buyers growing down below here, right? And I see that this looks like an intraday bottom that I could buy, grab 10 points, 20 points off of quick scalp, right? So what else am I checking? I'm also looking at the VIX to see, does the VIX look like it's at a top? I'm also looking at the flow that's coming in. Are people buying options right now, right? And then I'm checking TweetDeck to see if anyone's saying I'm buying this dip, or hey, we're at a previous low. Let's say let's say we're on Friday. We just tagged Tuesday's previous low of the week. We just tagged. So I'm adding all of these tools up. I'm listening to Trade the News, and I'm saying, as a matter of fact, we haven't heard shit from Trade the News. They've gone dark. And I haven't seen any posts from them either. But I'm looking for all of these things, right? I'm looking for all of these. I'm using all of these tools in conjunction at the same time. I'm saying, oh, look, there's call flow coming in. Oh, look, the VIX is at a top, right? Oh, look, we just hit a previous low from earlier in the week. Oh, look, there's buyers here on Bookmap, and Trade the News just dropped some news, right? And then some of my trusted people that I trust on Twitter are saying this might be a bottom here, right? And so that gives me the confidence to say, yeah, I'm going to take this trade, right? I'm going to take a quick trade. I'm going to go in. I'm going to look at the options chain. Well, and that's the other thing. On another screener behind me on my left, I have an options chain open in what I'm interested in. So let's say for today, for day trading, I'm looking at June 15th SPY calls. Okay, and so let me see if I can bring one of these up for you. No, I can't. This screener is not attached. And right now on June 15th, there's heavy weighting on 377p. There's 50,000 contracts. Right now they're worth $3.47, $3.43. But the bots I call them bots, right? You'll see me on Twitter say the bots or HAL or HFTs are on 377p's expiring today. You'll see them actually jump off and switch sometimes to calls. They'll jump from the call side to the put side, depending on where they're trying to steer the market. So they're still in those puts right now. But I'll keep, let's say I'm a bull, so I'm buying dips, right? I'm typically a bull. I don't like buying puts because they don't pay like a call pays. None of the puts are not built or designed to make you money. They can make money if the market rolls over for a couple days, but they don't make the kind of money that a call makes. If you don't believe me on that, I'll post an article on the theory of calls and puts and how they pay money, okay? So let's say for today, for intraday trading, I'm looking for a top, right? 380C is what I'm watching. So 380C right now is worth $1.89. I've been watching that 380C since the open. I know what people paid for those 380Cs yesterday at the close. I know what they fucking paid for them at the opening bell today. I know how far upside down there are, how much pain there is on that trade, right? And how cheap I want to buy it at on the expiration date. If it's a 0 day to 1 day to 3 dates, I want to know, like, is this cheap right now, right? The delta is a 35 delta, right? It's a pretty decent delta. I'm looking at the delta on that option. And when is it going to expire? It's going to expire today, right? At the end of the day, they're costing a lot of money. The market makers are building in. The dealers are saying these are worth $2. On an FOMC day, they probably are worth $2. $1.85, $1.75 makes sense until the event takes place or leading into the event or even after the event. How cheap can I get that 384 today? Can I get it at $1? Can I get it at 60 cents? Is there going to be a rollover at 1 o'clock, 1:30 in the afternoon? Is there going to be is there a point where I sell where I know that that option is up 100, 200, 300%? If I don't watch that option all day long, let's say I don't look at the 380Cs from the opening bell, right? And all of a sudden, let's say it's in the money at 380, and the 384C is now at that 35 delta, but it's up to like $3 or $4. I know it's overpriced. Don't want to be buying that overpriced option that's a 35 delta now. So I don't know if I'm explaining this correctly, but watch the options that you're interested in. Watch the options where the key is day in, day out, start watching options that you're interested in trading, their pricing for the day, and then also watch the options that the HFTs, that the algorithms are on as they bounce back and forth throughout the day. And then over some time, you will figure out what's cheap and what's not cheap. And if you do this day in, day out, week in, week out, you start to find that that in this cycle of 1 to 3 days, 0 to 3 days, when they're actually cheap and when they're not, and the general direction of the market. If it's going in that direction, when you should be buying them, when you should be dumping them. I think I don't know if Swaggy Stocks does this anymore. You have to pay for it now, but I think back in the day, Swaggy Stocks used to show a graph and how options lose money over time. And the graph is a descending graph, right? It's a descending, options descending lose money. So if you were to start at, let's say, a 10, right? Let's say this is just theoretical. Let's say 10 weeks. You'll see it, an options value start at $10. Every week it'll lose $1, right? Down to $1 into the last week, let's say, as a baseline. And then if the stock market's going in your direction on that option, you'll see a curve, right? You'll see a sine wave that goes up and down that shows you the best times you should have bought that option. And that's a visual representation of just watching options charts. So let's say with the stock market's going up, I want to buy the bottom of that sine wave and then sell the top of that sine wave in that time frame. Some people will tell you, oh, I bought some SPY puts or something, and they've been doing great. I've had them since January. I hear that bullshit. And they're not really capturing their value as time. You want to be locking in the profits on those puts and then rebuying above once they become cheap again. Because all options eventually go to, well, not all, shouldn't say that. 70% of options end up going to zero at some point in their life. I'm understating this right now. Nice little bounce on the SPY right now. We'll check and see if what we can take this to. $378. Somewhere up in here. We can throw a. Let's see if we can throw a throw a moving average on here. Throw a moving average on there and make you guys happy. Some of you guys trade moving averages. To me, this little yellow line is VWAP. You see the moving average up here, 377.43. See if this rolls back over again. Have that same resistance above at 382. Let's see what you guys are doing. Yeah, we got London closed 11:30, right? 10 minutes ago. See what you guys are talking about. I like HYG, Chase. I follow HYG. I follow another one too. Do you look at FX? Yes, I track FX. I track FX in the overnights. I track currencies in the overnights and over the weekends. Just stream during big events like FOMC. I want to do it every day. It's just a struggle. It's hard. You know, I don't have a job. I don't work. So it's I don't want to get paid to do this, but I need it to pay for itself. Using 21 screeners. 21 screeners. I don't look at the screeners all day long, but when I'm going to make a trade, I check them all. You guys want to look at Tesla real quick? Let's look at Tesla. We'll load some Tesla up too. Let's load some Tesla up in the background, okay? Look at some Tesla real quick. Resistance, light resistance at 690. Not bad, not bad. 680, 685, 690. Top currently is 707. That's also a squeeze area. 709, 710. Lots of supply above on Tesla. Nice support at 630. This is your trading range here for the day. 630 to 710. Any negative news, you're going to expect us to go down to 630. Any weakness into 130, expect it to trade to 630, believe it or not. 40-point drop's pretty big. Nice buy off the open this morning on Tesla. You'll bounce back and forth between there. That would correspond to this 382, right? This Tesla. 382, 710. I got to take a peek at, hold on here. Just a second here. See if we can get this VIX to roll over. Might take a trade here. I like this trade here. Just a second here. Everybody goes short at buy calls. Yeah, we're getting a little bit of rollover here on the VIX. We'll see if we can get a nice rollover. Getting tight here. I'm lining up a trade for myself here. I want to see VIX break through. There's a little. I want to see VIX break 3067. And I might jump into some of these 380s. Does anyone know? 2 hours, 35 minutes. Thanks, Rick. The put's getting more life. This is a live chat. Let's see. All right. So what do we got here? Scroll through and see what you guys are putting up here. Chance to break 370 today. And put's getting more life. Captain, any chance to break 370 today? Yeah, there's a. Does anyone know how late FOMC? Yeah, FOMC, we've got 2 p.m. Typically 2 p.m. You'll get. Let's talk about the FOMC as we head into this. We're getting VIX is starting to roll over here. Price started above 382 or so. I'm in some 380Cs. So today for FOMC, what you want to be thinking about as we head into this, a couple things. 2 p.m., they release the statement. Not always, but typically around 1:30, anywhere from 1 to 1:30. You'll hear me talk about runway. How much runway do we have into an event? So as time wears on, that's 11:47. Oftentimes, what you'll see is you'll see bears buy some puts, right? They get trapped in. You'll see some bulls buy some calls. They'll get trapped in as we head into that event. And then we'll trade sideways for a period of time. This today, 1:30, usually 1 to 1:30, usually 1:30 in the afternoon. So you'll get people that buy early puts, they'll buy calls early. They won't take profit. And as that runway runs out, what you'll see is you'll see buyers be trapped. And then you'll also see a trade sideways and then panic into the event. Almost always. Now, when it doesn't happen, I'll explain that in a minute. But usually what happens is you trap in buyers and sellers will drift down into the event. And then once the news breaks, you'll see a quick snap below and then a trade higher. That trade higher, that snap below, is usually a good time to buy calls, even if we're going to sell the market. But no matter what, it's a good time. When that first dump is usually a good time to buy calls. The key is that if the report was bad, we typically still get a rip higher, and that's for banks to grab liquidity and good positioning on shorts, right? Greed, right? You'll still see that rip higher, and then we'll sell it down. Now, if it's good news, we'll usually extend that rip higher and then sell it off later into the bell. Okay? So be aware of that. Now, the times when it doesn't drift lower into the event, this would be option C. If you start to see us legging up an hour, a half an hour before, you start seeing us making moves higher, like you'll see it. It would be something like, let me show you what it would look like. I think we already talked about this, but well, I'll demonstrate what I'm talking about here. Usually how these events go. So we got 2 o'clock, or let's call it 1:30. That's really what it is, 1:30. Usually what happens in here, you'll get buyers and sellers of calls and puts just trapped in here, okay? And they just whittle you down. They just burn you in. These are dealers trying to take premium, sucking the life out of you in this zone, right? You'll see two things happen. You'll start to see us legging up like this, boom, before the event. This kind of a trade, if you start to see anything nasty, this is usually quick and fast. If you see this happen, that means that a real true leak has happened. You have to jump on these immediately. You'll almost never see these if news hasn't leaked. Almost never. And you have to identify them quickly. They're usually super fast. They happen over the minutes, over a 2, 3, 4 minute period. We're going higher right now, by the way. We're not rolling over, if you want to know. We should blast off here at some point. We're about to break some support on the VIX. So this is what you're looking for, okay? Now, if that doesn't happen, right, and we're just trading zone to zone, if we're trading up here, right, if we trade in or bounce here, we trade back down to this 1 o'clock. What you'll end up seeing is buyers get trapped in here, right? And this is 1:30 over here, right? This is the event over here at 2 p.m. What you end up seeing is you'll see us trading here, let's say, and then you'll see some weakness down to this 1:30 or so, right? Maybe even further weakness, but you want to be buying one of these weak points, okay? And you'll usually rocket ship up. You'll see shorts get closed on panic. You'll see banks looking for signs of what was, or interpretations of what was said in the report. so that they can either continue long or get a really fat price on shorting the market down. So normally, not always, but normally in these events, even if you're a bear, you want to buy this dip down here, go long this, and be paying attention to whatever the news is if this extends, or so that you can then sell that and sell the market down from above. Not always, but 70% of the time. This is what actually happens into an event. Now, for Trade the News, the reason I like them on these events is because they will usually come out, and this is really weird. I'm wondering why I'm not getting just make sure I check this real quick. Okay, I got real time. Just want to make sure. So what you'll have is, so Trade the News is one of the oldest news squawks out there. Sometimes I'll tell people that Trade the News will come out and do an audio. They'll give you an audio presentation of breaking news, and people say it's not faster than what the AP Newswire gets, or what the AP, let's say, gives to CNN. They're getting that same news, that news facts, right, as everybody else, but they broadcast it faster typically than what's produced for consumption by the regular public. So as it comes over, it's not a teletype anymore, but as they get their news feed they're paying for, you'll have a market participant with a lot of time in the markets that relates this information to you for your consumption before it gets to, let's say, a Walter Bloomberg. So you're going to hear it here, or you should hear it here first, with at least seconds, 30 seconds, a minute, 5 minutes, sometimes just 5 seconds before most of the people have the chance to watch it or hear it or read it. And you're getting it from the perspective of someone in the market that will give you the this is bad or this is good really quickly. They'll tell you this is good, this is bad. Well, they basically tell you, oh shit, or this is positive news, at least on the initial reaction to the news without having any further details. So that's why I like Trade the News. They're very expensive service. I think they're 150 or 350 bucks a month. I'm not sure, but they're worth it on those 1 or 2 trades you get a month that you can trade off of that news that's being dropped, because you're usually faster than the market reacts. You're usually split second to 5 seconds faster than even the algorithms on how they trade the market from there. Got a little bit of a break coming up on the VIX right now. It's starting to break some support. We'll see if this can trade higher briefly. We'll see if the SPY does break out of this and trades to 382. Kind of sitting up here, right? No man's land, right? You can see we're in no man's land right now. So we'll wait for Trade the News. Well, on events like this, they're key for events like this. It's key to have them in the background playing so that you can be faster. You can have an edge over other market participants. Still watching lots of call flow right now. We've got some calls on Netflix, on Tesla, Misfit, Amazon, Apple, NVIDIA, all the big players. Good to see. We are starting to trade higher right now. We have a break of the VIX right now. All signs are pointing. We've got more buyers than sellers down below on the right-hand side. We are looking like we're going to trade higher here. We want to confirm this. We want to see a rejection on the VIX and have it trade lower or just start to drop lower here. See if we can catch a nice little push higher. Do I track Euro is collapsing? What is FOMC meeting? GMT time? EVXY. You guys want GMT time on I think I can bring you up GMT time on hold on a sec here. So GMT time, we've got the statement at 6 p.m. GMT. And 6:30 p.m. GMT would be the presser, if that helps. Nice little squeeze coming up here in the SPY right now. Getting a little bit of a dump here in the VIX. Oh, yeah, baby, push it up higher. Oh, show me them calls. You guys are in calls right now, right? We got 380s are only up, though, at 12 cents, 13 cents. They were down to a low of 189. Now they're up to $2.12. Still not a huge bid on 380Cs. I should be seeing more here. I want more money on this push. I want to see some more calls coming out there. Calls on BA right now, 617, 131C for $186,000. High algo score. Not really getting that squeeze that I'm looking for. Not getting that premium kick yet. Snap catching a bid. These calls are up like 20 cents on $2. That's not that good. 10 cents on a dollar, 10% trade. It's not that fucking good. I guess that's pretty good if you're a futures trader, right? 10% of what you're actually putting out there. Futures trader would be like, yeah, fuck yeah, take my 10% and run. Hell yeah. It's a great day. Take my 10% today, I'm out. VIX still bleeding currently. Want to see a nice rejection here in the VIX and have it head lower to see if we can squeeze it even higher now. No resistance yet on the SPY. Take a look quickly at Tesla. It's burning through levels here. In line with heading up to 710 as major resistance. Coming into VWAP right now. You can see VWAP here, this white line, and you see VWAP, the orange line, right here. Want to see a push higher above VWAP. Take VWAP up to 382. There's your 382 mark above. We'll actually line these up. I'm going to leave this 380 here before. It's still here. It's hidden slightly on this chart here, but there are some sellers hiding up in here. So we'll see if we can trade this higher to 382. Seems a little early for us to trade that high. I'm not quite gonna believe it. We have some calls coming on Snap right now. 617, 13C for $32,000. Weakness in the VIX right now. Oh yeah, I'll tell you guys a few things. Okay, so if you go to YouTube. You guys should know this, okay? Go to YouTube, and when you're watching me on YouTube, in the bottom right-hand side, there's a little cog for settings. Go to settings, and then go to speed, and speed me up as high as you can go. And there's an automatic buffer or delay from YouTube. It's like 15 seconds or something. I'll sound really funny for about 15 seconds, and then you'll come into real time with you. So you'll see a delay of about half a second from real time. You guys don't want to see. It's a built-in YouTube thing where they slow down your playback. Anytime you're watching a live stream and you want it to actually be live, go in and you have to set that every single time. And then if you're coming into an event or if you're coming into a buy or sell, you can go back and just check. Sometimes I'll even just go back and check and make sure that I'm up to speed time-wise. We are currently trading higher right now. We have a break of the VIX heading lower. It's at 30.48 right now. A little bit of resistance here on the, I believe that's the 200, the daily 200 on the 1 minute chart. Going to be watching the VIX here to see if it can reject and trade lower. Let's see if we can get some more steam here and trade it higher. You can see these sellers coming back in here at 380, at 379. Be aware of these sellers above here. Watch my cursor. right here. Another round of sellers here. These are weak sellers, right? These are your big sellers. I'll even make this thicker for you so you can see where your weak sellers are. These are your weak sellers above. We'll make the, excuse me, this is your weak sellers here. So you have two lower price targets, 379, or excuse me, 379. You have more sellers here at 380, and then your big sellers above at 382. Making a run higher, trying to squeeze this higher above VWAP. Calls coming in on AMC right now. Some puts on ARK. Calls on Tesla, 617 700C for $600,000. Tesla, baby. Squeezing higher now. Yeah, check my calls. Up to 220 now. These calls are doing quite well. Keep an eye on my calls here. These calls are doing well. I'm happier with this. See you guys are talking about. If there's ever a Super Bowl for traders, it would be this week today. Quad witching and FOMC. My body is ready. Yeah, I know that I was talking to some guys out there. Yeah, Chase. Chase is so Chase is going to bring up a great point. A couple things. Sport K. Well, let's talk about Sport K first. So Sport K is making a good point. There's a lot of money out there right now that's going to trade today. There's a lot of people sitting on the sidelines, been waiting for today. In Sport K is bringing up a good point. We're going to talk at some point today about how much of a rip we should get today. Do we get a Vanna trade today? When does the Vanna trade really start? We'll look at actual expirations. We're going to look at July today. We'll look at some where all the calls and puts are. The real Vanna fuel is on the June 17th expiry. Now, we can get a leg up today. And let's say we get the leg up into the bell, and then we could trade sideways and down for the 16th, and then into the 16th, let's say, right? But then as those puts wear off for the 17th expiry, you'll see that Vanna trade kick in on the 16th, 17th. That fuel. Now, if it doesn't kick in the 16th, 17th, it might kick in on actually on Friday, believe it or not. You might see a pin into Friday and then it blast off into Friday, believe it or not. So we have to monitor it. There are ways to get around it. If you get a call spread that expires, let's say, Monday or Wednesday, you're probably fucking set. You probably have two opportunities to buy that. Once today before FOMC or during FOMC. You probably have another opportunity to buy it after today, believe it or not, tomorrow at some point. There's a fair chance of you getting that trade once more. And you're not going to have to fuck around with, not Monday, but Tuesday, right? Because we have Mondays closed. You don't have to fuck around with theta burn. Now, another way to beat theta burn is to buy one of these dips if we get a good FOMC. But you want to be dating them out farther, like 3 weeks, so that you're not going to capture as much when you might only capture 100%, right, of that trade into Tuesday, let's say, if you wanted to hold into Tuesday. If you're going to get a call spread, you might only win 300%, 100% of that trade, depending on when you close it, right? If you hold it to, it depends if it's a credit spread to a debit spread, all these different things. If you cut the legs off them and then add them back on, you can do that with some trading platforms. So to each his own how you go about that. You can do a mix of those trading strategies with adding zero dates. And there's a lot of money that's going to come into this market depending upon which way we go. VIX is collapsing right now still. Even though we're weak on the SPY right now, I'm still in calls. I want to see this gap get filled down here on the VIX. I'd like to see the gap get filled at $28 or so. So we'll see if that keeps falling. I'm still going to stay in some calls right now and see what happens here. See if we can get that little bit of collapse in the VIX, a gap fill. So you have to structure what you're doing, or you have to think about what you're doing here, right? Another thing here, let's say you're like, well, Cap, what if it reverses and I get fucked, all right? Cap, I'm too slow. I always tell people, putback spreads. If you, especially in this event, I'm telling you what, if you put some putback spreads on, some ratio spreads, Google search putback spreads, get off my live stream for 10, 15 minutes. They're very fucking simple. And you'd buy them for, I'd buy a putback spread right now, dated fucking June 30th, right? Putback spread, fucking 620. Believe it or not, 620 putback spread. They will usually break even, or you might slightly make some money if we trade much higher. If we do sell this fucking market, if we have market collapse and start heading down towards 360, 340, 320, those are going to pay for you. They're going to pay for at least the burn trade that you have in calls. You're not going to make a ton of money, but if you're a bull, putback ratio spreads the way to go. If you're a bull that wants to protect your longs, they either pay for themselves or protect your longs. Highly recommend them on large implied moves over the next week, month, or whatever. So anyways, that's my rant on that. So yes, there's a lot of money waiting on the sidelines for the event today to put some money into the market. I agree with that. Chase brought up a good point. Chase said the 398 area by next week seems possible, then sell off again, just like the last rip that we had, right? Like ad nauseum, we talked about we should trade to 410. We should trade at the upper bound should be 430, right? That last run we had, 410 to 430. In futures, we got 420, 4200, right? We briefly touched 420. So we tagged right in the middle of that. We started to roll the market over at that point. The same thing we should attempt, right, to close those gaps. If I was a bank, if I was a hedge fund, and I wanted to get better pricing, if I wanted to destroy and clear out hedging and puts, so I could rebuy cheap hedging and puts, I would say to myself, yeah, we'll run this to get cheaper positioning, right? And we're gonna make it fail just before the bulls are super fucking duper long in the market. So if the bulls think we're gonna close the gaps, we'll run it up to just before we close that last gap, and we're gonna reverse it down again. So heading up to that 398 or so, I forget the number that I had for the gap close, but I posted it on Twitter yesterday. If we do trade higher here, even if we get a decent rip higher, let's say we get 50 BPS, let's say we get 75 BPS, and we already know it, and we trade up higher, it's probably going to be short-lived. The only way that you're getting new all-time highs, you already know what it is. I already told you earlier this morning what it is, and you're not going to see that right now. So as a bull, you're looking probably to close out those, or get close to closing those gaps above. Some reduced volatility as well. It's going to take time to close those gaps. We'll talk about that later on as well. Compression of volatility, and we're going to we have time right now, so it's 12:10. I'm going to bring up some stuff for you guys to look at. Let me see when. Now I don't really use swaggy stocks. They used to be super free, but we're going to look at them right now. I don't use them as much anymore, but if you're a new trader, these are good to look at. So this is options max pain down here. This is the calculator. They do not. This site does not work intraday. Does not work in the week. But on a farther out time frame, I like looking at it. So right now we're at 6:15, but you've got right now the July. You've got the July strikes here. And I do want to show you this, okay? So for the first, you've got 395 here, right? This is what I really want you to see is as we go on. Still have lots of puts here, right? They don't want to pay these puts right down here. So this is bullish, believe it or not. And you start to get less bullish, right? You start to see more calls here. 7.6, 7.8, even Steven. And you can plot this on a chart where these max pains are and kind of see where we should head, right? More calls heading into the 11th, but this is what I really want you to see. Okay, start to see a little bit of puts here. It's kind of even Steven here, 402. Not a big deal. Okay. And this is where we have lots of puts here focused around the 15th of July, right? This is a big strike for July. So I'm going to expect the top right now. I'm going to expect the top of the market coming into the 15th. And then on the 18th, this is the key here. You see this 18th? See all these calls? They're typically not going to want to print these. So we'll start to see a rollover heading into the 15th, into the 18th, and into the 20th, right? You'll start to see that develop as we trade into the month of July. So right around the 15th, I'm going to look for, and at least according to Swaggy Stocks, I'm going to be looking for some weakness into the middle of the month of July. The other one I want to show you is Spot Gamma. Also does these charts. Let me see if I can log in right here. We've got some different sign-ins going on here. Let me see if they're showing the let me see if I can hold on a second here. Just 1 second here. Trying to bring up a chart for the 6/17 expiry. Oh yeah, keep pushing. I want you to disregard real quick. This is the 6/17 expiry here, okay? I want you to see this 3,700, right? We have fulfilled basically the 3,700 puts. As they begin to lose value, we should start to trade higher. You see 3,800 here, right? This strike right here. And then the next strikes are 3,900 and 4,000. They're not going to want to print these, but they are going to want to print these. This 390 I want you to pay attention to for the 6/17 expiry, okay? And why that is important. We've already tagged 370, right? We've already monetized the 370 puts down below the past prior days. The next magnet above is this 380. We're coming into this right now, right? 380, 382. And the next leg higher would be that 390 zone and then possibly even 4,000. So if you're going to see that Vanna trade higher as we head into, if you've got a spread in the market and you've got, let's say you've got the 370 put and you've got the 400 calls, right? You're going to monetize your 380 puts, and then you're going to look to monetize the 400 side or 390 side higher as we head into that OPEC state, the 17th. If you don't get that, if you don't get the Vanna trade on the 17th, sometimes it'll be when it rolls off. If you don't see the monetization of puts rolling off, dealers covering, you might not see it until the 18th. So it either starts just before coming into or just after the trade higher. You are watching the SPY trade higher now, 377.97. You are seeing a little bit of resistance above here at 379.48. Look at my cursor here, 379.45 or so. 379.45, right about there, right? And then 380 right here, and then that tag above 381.99. I'm going to look at my calls over here. Calls are now worth $2.30. Oh, yeah. That feels good. Feels good. All these shit talkers on fucking Twitter talking about making fucking money. I have no fucking idea. A little bit of a bounce here real quick. We might have a quick reversal here. We got a little bit of a support level being found here at $30 flat on the VIX. You might want to take some off the table here. It's not showing up quite as much on the SPY. You might see a little bit of a reversal here, or a little bit of a hold on or something. It's like it's chilling. That's chilling at the moment. You might want to take a little bit off the table here at $2.30. Let me see if I can show this to you on the VIX. What I'm talking about here in the VIX. Let me go to the 3-minute on the VIX in this chart here. I'm going to bring this over. Show the VIX real quick. Got this nice gap that needs to be filled here, right? Resistance here. This is a point of concern right here, right? See this right here, right? See the importance of this level here going back in time, right? Very important level here at 30 bucks. Just bounced off $30.20, 13 cents. We're going to go back to the 13-minute chart. So you're seeing this quick bounce happen here in the VIX. What you're looking for is for this to reject and come back down. If this does not reject, you could see that sideways trade, right? Where we trade sideways into the FOMC. So you might want to take some money off the table here and then wait for FOMC at this point. A little bit of a rollover in the SPY right here. We'll also track for rejection on the VIX. Looking for some rejection on the VIX at 30.77. Don't talk with that bear voice. Yeah, Monday is closed. It doesn't matter if we're, it doesn't really matter if the shorts will close on Friday. It's the theta on. So let's say you buy like a Tuesday call on Friday at the bell, and we go up 50 points. It'll be you might make like 30% sometimes, unless you get unless you like open at 400 on Tuesday. Dealers will kind of fuck you. So just structure your calls. If you let's say you're going to buy a call to hold into Tuesday. You probably want to buy a low and slightly more in the money so that it's still printing into Tuesday. If your theory or viewpoint is that we're going to open up higher on Tuesday, just account for that theta burn into Tuesday. Oftentimes, I've gotten burned myself personally. I'd be like, yeah, I'm fucking holding these calls, and then I get into like the Friday after hours, like 4 o'clock to 4:15, I'll forget. Like I swear, like I'll just fucking forget that I know that we're closed on Monday, and then I'm buying some fucking zero dates that are a little bit too far outside the money, and we open on Monday, and I didn't make as much as I anticipated, and or I should have held calls farther dated, or spreads would have printed better, like close the zero dates on the Friday close, buy some spreads on that Friday close for the Tuesday open. So I capture all that money on that Friday, and then it's like a cherry on top for the Monday open. Buy an in the money call spread, open up on Monday, sell them for profit. I don't care if we're going up from there, down from there, or whatever. Wrap it up, go find a girl, and spend some money on her. I'm doing that voice near Sid, baby Sid. Sid's out there. He's got the headphones on. He likes that deep breathing. I'm breathing down Sid's neck right now at work. He's probably got a bunch of men around him. He's probably a really man's guy. He's like a manly man. He's got some rando dude on YouTube just talking down his neck. Yeah, Sport K. So some 40% of SPX Gamma expiring today. This week, he means, which is true. It is this week. It's the 17th. And it's 40% of SPX Gamma total in the market. It's huge. Sport K is also saying no one wanted to drop the hedges before FOMC, so this is a unique situation. Yes, we have a unique situation in the hedges being left on, and also the date of VIX expiration. Because of course the new VIX contract traded today, and then the key was having to watch the expiration yesterday, and was it way out of whack? So if the expiry yesterday was at 28, the VIX would have rocketed today, right? If the VIX was up at 34, 36, it would have came down, right? So you really want to be watching the VIX expiration and the new contract. How much is it in line? SPY now trading higher. Looking to tag that 380, baby. Just keeps grinding higher. This is a little bit of advantage, just so you know. It's a little pull higher right now. Puts losing value. HYG calls for chase out there. 617.76C, $130,000. We don't normally see too many people buying HYG calls. We got another one, 617.75C for $76,000 on HYG. BA getting a huge bid. TQQ, June 17th, 24C, $161,000. Starting to see some risk-on moves in the market right now. Big buyers in the market, this big green ball right here. A little bit of rejection still on the VIX. We'll see it. Well, a little bit of settling down of the VIX. I'm probably going to take some profit coming up here shortly. I'd really like to hold into 380 here. I'm going to start to take some off here as we head up into. See if we can. As we head up into this 380-ish. I'll leave a couple on for 382. Take a look here. At $2.37 on calls. I'm happy. This is 15%-ish for me. I'm going to sell a couple racks and take some profit off the table left. Leave one runner on and run that to 382. And hold that for 382, and I'll actually try to add to these if we roll it over at any point. If you watch my cursor, if we get up to this 380, I'll probably take the last rack off. I won't try to get to this 382. I don't think. We'll see as we get there. We could trade there. I think that we're going to get trapped at 380. That's my thought process. We're going to get trapped somewhere up in here. You're going to see these sellers come down to 380. So price target right now, 380-ish, 379.41. And I'll leave some just one rack of runners on, and I'll dollar cost average into those if we have that weakness, or just sell them. You can also move your stops up on your calls so you don't lose any money. I've got my stops at 215 right now. $2.15. Yeah, Winky made bank on SIG. Bank on SIG. Sid's like, I'm taking the headphones off. Yeah, their max pain is incorrect. That's a free site. That was more geared towards people that don't want to pay money to find out where. There are other ways to find it too. SPX gamma expiring today. Let's set playbook speed to 2, and it will skip the buffer and give you about delay. Yeah, I wonder why my chat's going slow here. Refresh my chat. Nope. I don't think I'm seeing my chat's not refresh the chat. I just refreshed it. Okay. Left one on for runners, looking for 380, 382. I've got some real weirdness going on right now. So on that topic, a couple things. First off, let me know in the chat. I use options or flow algo is what I use for options flow. Some of you guys know why I use it. I've already told you guys in the past why I use them. I've used every options flow service out there. I'm not in the business or wanting to be in the business. If I want to be in the business of hunting a company down right now, I'll use bar charts. I can use from the services that put out too much information, options flow services that put out too much information. I can usually find that information on bar charts, either the paid or unpaid service, for much cheaper, and figure out planning out a month or 2-3 months in advance. Sometimes I feel like a lot of options flow services give you too much information for information that you need that's critical in time, right? And is based on quantitative equations. So flow algo has the only flow they put up it's at the buy. It's unusual. It's buying at above the ask. So it's usually fast trades. They have a signature to them. They're matching up to dark pools. So you don't get all the flow that comes through, and they do miss some big trades, but they give two things to me. They show me the general direction of the market in real time, and they will usually pick out one or two tickers that are on fire for the day. So if you're getting information overload, some of these services I've paid for, they fucking suck. Like, you hit some of them, but not enough of them to be successful. They might say, well, we've got a 70 or 80% success rate. Yeah, but that 30% can be a fucking murderer when you're actually applying it, right? So what I really, for options flow services, it's the most, in my experience, it's the most directive. It's the most, hey, you should be watching this ticker. This ticker is important. You should be watching this hedging. You should be watching this hedging for why it's a buy, why it's not a sell. We got some XLF puts coming in right now. August 18th, 33p for 3.5 million, and August 19th, 33p for $6.3 million. It's actually a good sign that they're dated for August and not for right now. It's not too negative. You might see some weakness over them coming into the market, but these look more like hedging than put flow. They show an algo score. They show what they paid for them. They have golden tickets. There's actually a system in buying golden tickets. I think Flow Algo even lays out for you how to trade golden tickets. They tell you where they bought them at, where you should buy them at, the thought process behind them. So if you see a golden ticket come out on a high, you wait for the low in the trend. If the trend is down, they give you a place to look to re-enter. There's reasons for that, because these golden ticket buyers, they'll usually rebuy again if the trade goes against them. You might actually see like a golden ticket for 10 million, and then you'll see 2 or 3 more come in down the road. If the market or the trade goes sideways or down, you can put more time on the trade, and you usually get a print off them. I should do a video on that, by the way. But Flow Algo, for me, has been my most successful options flow software that I've used. They're expensive too. They're fucking like $150 a month. I think their yearly rate is like $75 a month or something. You pay for the whole year. I pay by the month. I think it's $130 or $150 a month. Yeah, and there are ways. So just so you know, yeah, hey, no worries, man. Whoever said thanks. Having live. Someone said something about being live. Thanks, CaptainJimJames, whoever that was. Being live with us. The sexy voice. Yeah, stock Floago is basically the cleanest one out there. So the well, you know, when I was a new trader, I used all the free stuff. And to be honest with you, a lot of you guys out there, you can use a lot of the free stuff. You can use bar charts. You can follow traders that use sophisticated software or have access to a terminal, to a black box. You can. There are people giving free information all over the internet, and people that you can trust. There are groups of traders out there that you can trust. That'll give. Dude, asking a question is always ask questions of people on Twitter. On Wall Street Bets is tougher these days. Twitter seems to be the place right now for the best information. I was a longtime member of Wall Street Bets. But Twitter, you can find some really good macro views. You can find day-to-day stuff, weekly stuff. You can find guys that just do stocks. You look at Winky in here. Winky, dude, all over stock picking. Gangster stock picker. Gangster. And you got people like him, too, out there that's all they do, stocks. You got guys that all they do is follow Tesla. And that's another thing, too, to remember is that, you know, when you're following traders, if you're looking for the SPY, find someone that's trading the SPY. If you're looking for Tesla, look for a Tesla trader. Don't look for a Tesla bull or a Tesla bear. Look for a Tesla trader. Just ask. Be like, if you're a Tesla bull out there, just ask a question. Go on Twitter and say, can any of you recommend a Tesla trader? Not a Tesla bull or a bear, Tesla trader. You might get some people pissed off at you, and find one. And then subscribe to that person. Follow that person. Follow 5 of them. Put them on a tweet deck if you're only trading Tesla, so that you can get within a circle of people that are trading Tesla day in, day out. If you're trading the SPY, if you're trading S&P 500, if you're trading ES, if you're trading the Mini, anything S&P 500, you want all those people, even if you're fading them, whether you're trading with them or fading them, you want them in your tweet deck. You want that. You even create a list, however you do it on Twitter. Create a fake account, whatever it is you want to do, and follow the things that you're trading. If you're trading the VIX day in, day out, week in, week out, ask, who should I follow to trade the VIX day in, day out? Who should I follow to trade the VIX week in, week out? And then start to expand who you're following to include other things, right? So if you're let's say I'm trading SPY day in, day out, I've got a group of people that I follow for that. Then I want to at least pepper in some stock traders. Then I want to pepper in some macro traders, right? Then I want to pepper in some currency traders. Then I want to pepper in some bond traders. I want to pepper in some VIX traders, and to who I follow. And I build and cultivate this list of people. And, of course, I add new traders in there because, believe it or not, you guys think all those people are smart? I fucking love following new traders because they don't think like I think or other longtime traders think. They think out of the box. Now, they don't always see everything, so they trade dumber, dumbed down trading, and that helps me to be a better trader. So always add in new traders, too, that you think are smart or making good trades. So I'll look for new traders with great thought processes and add them into the people that I follow. A little bit of a rollover here on the SPY. I've got down to 219 on my last bunch of options here. We'll see if my stop loss gets triggered. Looks like it's going to get triggered here. Probably. I'm probably going to sell out of these. Looks like I'm going to roll this over. So I'm now out. We might trade higher here. I'm out though at this point. So I'm flat on the market. Yeah, not many traders post their trades. they're all hindsight. They'll come back, make fun of you. They'll get in your comments section. They'll fuck with you and stuff like that. But there's a problem with that too. I'm day trading here. I'm trading. I'm an active trader in the market. So someone will come back and be like, "Hey, I thought you were a bull." I'm like, "Yeah, I'm a bull and a bear." I'm like, "I'm a trader too." And so not everybody can keep up to where I am in the market. How long I'm long, how long I stay long. They'll be like, that guy's getting, that guy got fucked in his calls or his puts or whatever. I got fucked last week, dude. I fucking had fucking puts. Fuck. You guys want to see this shit? I want to see where the fuck it was where I had these fucking puts. It was either the 9th or the 10th. No, I think it was on the 8th. Yep, that's what it was. It was the fucking 8th. I think it was the 8th. Yeah, it was on the 8th. So you guys want to see some fucked up shit? So in here in the 8th, let me get rid of this. So I bought puts into this bell right here. I bought 400 Ps for the 10th. For the 10th, I bought them on the 7th. At this bell, right? Right here, I sold them. Right off the bell, we came down, I sold them. I think I did it live on Twitter. I took some longs here, and we started rolling it down. And oh God, this makes me so fucking angry. So I fucking bought them right here. 400 Ps expiring on the 10th. And this was my hedge. And I got panicky. I knew we had distribution. I think I was talking to accounts blowing up about this. And I was like, yeah, this shit's selling off. I'm buying my hedge here. And I think I made 30% down here. This would have been like a 10,000% or something fucking stupid banger. These cost me like, I think 18 cents. I think I sold them for like 30 cents or something over here. 33 cents maybe, if I recall. I can't remember the exact numbers. These fucking things were like fucking $8 or something. This is the worst trade I've made all year right here. Worst fucking trade I've made all year long. And I'm in here fucking around day trading. Meanwhile, fucking this bullshit. And I threw on fucking calls for July. I still have these calls for July. I still actually I've got some July fucking calls, hoping that today we fucking trade higher. So I can somewhat unfuck myself. But this was probably the worst trade I've made this year. Selling these puts. And I knew this was rolling over. And of course, I'm panicking buying putback spreads over here, ratio spreads. And they haven't printed. I mean, they printed, but not what they would have printed. Had I followed my fucking rules. Fucking ranting against myself. Yeah, some of you guys watched. So when they went to $17, the June 10th, I had the June 10th 400 Ps. I was fucking worst trade of the year, and I knew to hold those fucking puts, and I lost. I lost money on the call side, and I lost money on the put side on that trade. A lot of money, almost six figures. I think I'll break even at like maybe 50, 60,000 when I'm done, but it was the fucking damage. I took damage on that trade. I'm still way up in the air, but I'm fucking pissed on that trade. I'm not gonna fucking lie. Not gonna candy coat it. Wasn't fucking fun. It was pretty fucking ugly. So we are rolling over right now. If any of you guys were in calls and you got out in time, tell Captain can't fucking time a fucking market. Lick my balls. Okay, so we're getting some rollover here, right? This is important to see this rollover here. Excuse me. You are watching You are watching that trap we talk about, right, that takes place. So where traders get trapped in the market heading into FOMC. This surely shows that there hasn't been a leak outside of the 75 BPS leak. This is 1:30 in the afternoon here, right? We see this trap developing as we head into. We should see some weakness heading down into FOMC, into the announcement, into the statement at 2 p.m. We should see some weakness. This is where, if you're not a badass day trader, sometimes it's better for you to wait for the move, right? One of the key things as a trader is to, as an investor, is wait for confirmation. Be reactive, right? Rather than trying to time shit like this, you jump in after. You can always wait. Let's say the move rolls over here. You wait for the break and the signal to take a short, right? You wait for this here to prove itself rather than just trying to time shit like this. Okay, it's better sometimes. The better trade is to wait, or the more successful trade over time is not trying to trade to time this shit here. It's looking for some confirmation and direction, right? Or looking at intraday trades for bottoms to buy and tops to sell, right? So you just bide your time, wait for capitulation, wait for demand, and wait for supply to know when to take a short or a long. So just be clear on that with you. Don't be like, oh yeah, Cap, I want to be like Cap. You don't want to be like me. You want to be like a successful trader, and you want to you want to be it shouldn't these are bad habits. This is like gambling habits. You got to be looking for these moves to take, or for capitulation, right, or for tops in the market before you place in trades out there. So I do think you're going to see this. I do think you see this trap we talked about at the beginning of this morning, and then you'll see some weakness down at 1:30 or so, and we're going to be looking to buy a dip down here into the 1:30 hour. It's currently 12:44. I'm going to take a quick break. I'll leave this up for you. I'm kind of concerned right now. This doesn't always happen, but sometimes Trade the News is quiet throughout a day, and I'm not exactly sure why they're quiet right now.
You're listening to Trade the News.
Yeah, I'm just not getting. I'm gonna take a quick break here, and call and ask if and why I'm not getting. I haven't gotten a single audio alert from Trade the News right now, and that happens. Maybe because it's FOMC, they're not going to do an audio until it comes out. Haven't heard anything. So I'm going to just check real quick, give them a call, and find out why I'm not getting any audio. I'm hearing it on my end, but I'm not. They're not talking at all. Oh, I didn't see this new name. You went full port into calls on CPI. I did too. I fucking got burned. I got smoked. A lot of people got smoked on CPI. They were burning that shit. That, you know, the thing about, I haven't talked about this on so the CPI thing, right? I was talking about accounts blown up, and he's like, "We're going up." I'm like, "I think we are too." I think Winky said we're going up too. I think we all were in agreement, like, "Hey, we're going up here." And of course, right there, we could see we were discussing it, saying, "This is distribution. We're definitely selling it." And CPI print wasn't hot. It was up 0.1, believe it or not. It was within expectations, believe it or not. And of course, the story comes out, no, it's not within expectations. And actually, the other CPI number was coming down. I forget what it's called right now on the top of my head, but and actually PPI is showing that as well, that inflation's coming down. That's not really the real problem with the market. The real problem with the market is the yen and some China fears as well, what they could do with the yuan and their currency. And their prime minister, Japan's prime minister, is ham-fisting saving his currency, which is very bad for the U.S. They divest out of the bond market. We'll talk about that too. Bond market crashing has some variance to give to equities being okay. Although if bonds continue to crash, it could be really bad. Because you remember that we're selling these fucking bonds to these countries. We're not selling them equities. We're selling them bonds. It does impact our equities market. And people are saying, why is it not impacting the equities market like the bond market? It's because they're not invested in the fucking equities market like they are the bond market. Whatever. So there can be some divergence in the weakness of our equity market versus the bond market. Not a bunch, but you will sometimes see divergence in the burning of the bond market. People are like, why is the bond market burning more than, why is there divergence in the bond equity market? The other thing to keep in mind is that the same thing is with crypto. Crypto tracks the equities market more than it used to, but it too can have variance from the equities market. You can see if the bond market is fucking failing and the crypto markets are failing, this money does have to go somewhere. So you might be seeing some flight of safety into, of course, gold and silver, but you might see some flight to safety into equities, even if it's only brief, in these divergences. Now, I'm not talking about macro or anything like that, but you usually have that 60-40 split. You might see it be more like a 40-60 split. So there's some wiggle room in that, and people aren't talking about that on Twitter either, which kind of fucks me up. Nor are they talking about the yen or the yuan. No, not really. It was 0.1 it was only 0.1 on core CPI. No. It in your viewpoint it did because the news told you it did, that it massively disappointed. But it did not in the overall grand picture. The market was rolling over regardless of the CPI print. I'll put it two ways. The market was rolling over on that CPI print, and if the CPI print was excellent and we ripped higher, it still would have rolled over after that CPI print. That was distribution. You will not change my mind on that. And whenever you see unexpected news, whatever goes the opposite way usually reverts to mean again almost every single time. And that's due to positioning of the banks. And when they're not positioned properly, they will bring it back to take it long once again. I disagree with you, Sport-K, and I love you. I disagree with you too, Sloneck. But that's okay, we can disagree. Short squeezes is a whole video we'd have to do on it. Yeah, so I'm flat right now. I'm not gonna take a trade right now. I'm gonna be looking for weakness into any kind of weakness down into 374, even 370 is what I'm gonna be looking for. And if I miss the trade, I miss the trade. But for right now, what I'm looking for is right in here. I'm looking for weakness down into the event, and then for whatever the announcement is, to buy that bottom. And then if the announcement isn't good, to sell a top up here or hold it into the close today if the announcement is good. The last point that I would make to you would be, or the last point that I'd make to you on this is that I made on at Captain's Alpha. I'm going to take a quick break here, but I'll take it between 1 and 1:30. The one thing I would let you know here is that make sure you're paying close attention to that FOMC meeting. You may still see the market trade higher just to buy cheaper puts, and then they will roll it over in next week. So Chase earlier was talking about us getting to 400. you could be coming into, let's say, Tuesday saying, yeah, we're going to close that 400. Everything is hot and dandy. News is all good. And you'll get those cheap puts heading into the beginning of next week. They'll roll it even sooner and will head much lower. So like blinders on from what the news tells you. Pay attention to what the FOMC is telling you. Trade the market to the right, of course, but keep that in mind as we go into next week. How high what do we actually close those gaps? Should we close those gaps with what that FOMC meeting is? Just be conscious of that, because they can drag this market down into the 30th, into the 30th down to 320, believe it or not, and they can sell this market right down at any time. So just be conscious of that today. Pay attention. If let's say we trade this market up into the close, after the close, get in there and go through the statement on your own. Give a second viewing to what Jerome Powell says. Watch that video a second time, the presser, from start to finish, because the news narrative that's given to you, that you're fed to on social media and in newspapers, is not always what's really happening in the background. It has more to do with market mechanics than it always has to do. Like for market mechanics, they'll tell you stories worse than it is, or better than it is, because they want the market to move a certain direction. Just be conscious. Hopefully you guys sold all your calls. You're not trapped in your fucking calls right now. Did you guys close them out? Yeah. I should have known that they were selling that fucking thing. I should have fucking known. Hey, Rip James, what's up, brother? I should have known they were selling. I did know. My friends and I were all talking about it. My inner circle and I were all talking about it. Winky and I had a conversation on the phone about it before it happened. So, that's my fucking fault. I'm fucking greedy. Not only am I greedy, but I was banking on that CPI print. I was like, well, because I forget what the CPI print was right now at this point. It was like 8 point, I was on a 5.6, 6.5. On top of my head, I can't remember, but it was like 0.1 over the expected. It's high. Of course it's high. But in the grander scheme of things, it wasn't a blowout. It wasn't the 9% or whatever. It wasn't insano. They were rolling that shit over. I should have known that I did know that they were rolling it over. But of course, my greed is like, they're going to sell the news on this shit. And I'm going to make all these tendies on 0 to 8 calls. And I got burned. But I'm always honest with you guys. You guys know my positioning in the market. You guys know where I'm at in the market. You lose and you win when you're honest about your trades with people. You guys know that not many people are honest about their trades out there, or they do the hindsight trade and they come back and say, oh, look at this. You also see traders that give you both options. They'll say, well, we can go up from here and down from here, but you never get that. You never get that little bit of like, we can go from here, we can go to 382 right now, or we can go down to 370, but they'll stop short of saying, but I think we're going to 370. And that's really what I want to hear somebody say. I'll be honest with you. People are like, you shouldn't tell people that because they have to think for themselves or they're not learning. I'm like, that's bullshit. I want to fucking learn from guys that are like, I think we're going here, and then be like, why do you think we're going here? And then have them explain themselves to me why they think that we're going there. And when it fails, I can go back and say, what was I thinking? Where was my, holy shit. January 19th, 420C, $30.2 million just came down the pipe. Meta, January 19th, 2024, 420C. Interesting. Because I've got January 13th, I think, January 15th of 2023 as, no, 2024. 2024, I've got the low in the market, the worst things could get, as January 15th, 2024. And someone just dropped a $30 million bet on Meta. January 19th, 420C, 30 mil. But the reason I want you guys to know what I give a take publicly is because so you can go back when they fail, and you can look and see, hey, where did I fail? Why did I fail? What reason did I take this trade when I knew something was up, or did you not see that something was up? That's actually a prime example, that market roll over there. A few close friends of mine here on Twitter, I talked to these guys privately. We knew that it was rolling over. It's just pure greed is what it is. Pure greed. It's like, well, am I going to take that trade down, or am I going to take that, 10 cent, 20 cent, those 20 cent calls and hope to multiply them by 3, 4, 500%, and go against it, the contrarian trade. So when it burns and you fucked up, you own it, but at the same time you look back and find out why. And usually you lose trades because you broke your own rules. 9 times out of 10. The 10th time is greed. Pure fucking greed. Pure gambling. But I'm always honest with you guys. I don't mind telling you guys where I think things are going, even when I'm wrong. It's not financial advice. It's what I think is going to happen. So don't take it as financial advice, but definitely take it as learning, right? You guys are learning more than what a lot of people talk about in public. They don't. Yeah, Spot Gamma is notorious for this. Love Spot Gamma, but they're fucking notorious for they need to sell subs, right? They need to sell people a story, or they can't be wrong because you'll stop paying for their service. $300 a month or $500 a month, or the fuck it is they're selling at that time. Seeing that weakness coming into 1 o'clock now. I'm going to expect some more weakness down into 375 and then possibly even 370 for a very fast, quick moment as we trade down here. I'll leave this 370 up. You can see it down here. This is where the real demand is right now at 370. So they can't do that, right? So, of course, you read like a report from a company like them, and what do I do from that? Then they're like, figure it out for yourself, asshole. So, of course, I'm off running around checking market profile, volume profile. I'm checking the traditional charts. I'm checking in with the Elliott waivers. Then I'm checking in with the sentiment. I'm checking in with all these other people, right? News sentiment. Checking the options flow, real money buyers, real money sellers, all kinds of nonsense. And to be honest with you, Brent is probably a kick-ass trader. So I really do want to hear what Brent has to say. I really want to hear what Jedi Marcus has to say, or what Vol Plateau has to say, or what any of these great traders out there, and see what their take is, and where they think, even if it's wrong. But the problem is, publicly, you get lambasted if you're wrong, right? And you get lambasted. They're like, he's horrible, she's horrible. They come in, shit on you, and then of course in your brain you're like, I don't want to fucking deal with these fucking people. Fuck these people, they're ungrateful. So you're just like, fuck them. I'll do my own thing. The reality is most of those people are just fucking trolls. They're angry, they've lost, or they've never made fucking money, or they just have an unhappy life. You don't ever want to live that unhappy life. You always want to live that happy life, right? You always want to be living that happy life. So, all right, so here we go. So we are heading at FOMC. It's 1 o'clock in the afternoon. I'm going to take a quick break here. It's 1:01. I'm going to be back with you by 1:30. I will be in the background. I'm going to mute my camera, mute my microphone. I'll leave Trade the News on in case they say anything. I'm going to give them a quick call and just check and see if maybe I'm having some technical difficulties. I'm not sure. It says I'm on.
You're
right
listening to Trade the
I just
News.
tested it, so they're just not on right now. They're probably waiting for the FOMC decision to give a some verbal information. That's what my assumption is. And I'm not buying this dip at all. I'm not getting. Do not fall for this down here right now. We might get a trade in here, but do not fall for this right now. Unless you start seeing that trade I talked to you about. Sometimes you'll get sometimes you'll get a leak. If you're looking to trade that right there, it's that same thing. You'll see a fast couple moves down, fast couple moves down, fast. You want to see confirmation first of some kind of move like this. Okay? If you don't see this with confirmation, this is just a trap. Okay, you guys see this on your computer right now? If you don't see this right now, if you don't see this confirmation, it's just a fucking trap, okay? So any kind of bounce in there heading into FOMC, it's typically just going to trap you in more and more, trade it down, and you're actually going to be looking for that buy down below here. 374, possibly even 370. So don't fall for this kind of shit right here, okay? We could trade up higher here, but they're telling you 9 times out of 10, right? Hand grenades and horseshoes, that ain't the dip you're looking for. Yeah, you only have to be right half the time. The VIX is different. Showing the VIX here is a different trade, and I agree with that trade, Luke. As soon as the event vol is over, or even before, that's the good thing about the VIX is you can trade that shit down before anything even happens. Watching a large bid come into the market right now. July 15th, 404C, $1.4 million. TQQ high algo score, 617, 26.5C. SPY, 715, 404C, $731,000. SPY, 715, 403C, $760,000. This looks like someone's betting on a leak right here. I'm still not buying it. I'm not buying it. Possible. This could be the start of it, but give me like half an hour. I usually get sucked in too early and end up waiting. So that shit happens to me every time. Yes, sir. I saw those SPY calls just came in. Golden on SPY, 715, 404C. Looks like someone's taking the long call here. This is a wise thing. I want to look at that one call right now. We just had a call come in. Golden ticket, July 15th, 404C, right? That person is putting enough time on his calls that he doesn't care if we dip down here for a longer run, right? He doesn't care, or she doesn't care if it happens here. They're getting in early right now, so I want you to know that there are some buyers stepping in at this low right now, and they're saying, but they're putting some time on their calls. And when they threw some zero dates, that's a prop desk. They like throw some zero dates on there too, make sure it goes up a little bit. So there are some buyers stepping in early currently. I'm not gonna fall. I'm not taking that fucking bait. I want to see some fucking new highs until this shit happens. Last thing I'll leave you with before this, if things get exciting, is any kind of a rip we see on good FOMC news. Oftentimes you'll see that dip, right? And then you'll see, let's say you see the dip, right? You'll see a rip higher for the actual statement, and you'd be like, fuck yeah, and then fucking Jay Powell answers some stupid questions at the end of that presser, and we'll come back down, right? And then once the presser's over, we'll blast off to the close. So just be conscious of these two tops and 2 trips higher up there, okay? Just be conscious. You'd be like, fuck yeah, we're going all the way up and to 390 or some shit, and at like 380, we'll get ass blasted with some stupid question from whoever they were trying to not allow into the presser, and they're the last person to ask not dumb questions, but the real questions. You see one more quick bout of weakness before we get into the bell. And he sucks under pressure. No offense, I like Jay Powell, but he fucking sucks if you ask him a question that wasn't prepared. Watching a nice bid coming into the market currently. I'll be right back. I'll be back with you no later than 1:30. Gonna make a quick phone call. I'll be right back.
You're listening to Trade the News.
All right. All right, almost back. I like this right here, to be honest with you. I always start getting greedy in here when I'm looking at this over here. Oh, shit. I just did it again. Hang tight here. Sorry, I'm over here. Detach. Saying tight. I'm trying to get this. Try to get this matching up here on the left hand side so you can see the candlestick. It's a 1 minute chart there. VWAP. And then I'm not gonna put the moving averages on here. I guess I could, but there's no real fucking point. This is very bullish right now. I just want you to know that this is very bullish here. Still have some sellers above, some resistance above at 382, trying to hold it back. I get antsy in here wanting to buy. Just as a note as a trader. It gets me itchy. I end up entering trades too early. I get antsy pants. I'm like, oh yeah, I can't miss this right here. Like this bounce right here and this push right here. I want to buy this so bad. I don't know about you as a trader. But that's what I do. I start getting antsy. Where I want to buy this. Not seeing a lot. Just be careful here because there's not a lot. I mean, there's support at 374, but not like there was earlier. This support level here, over here, has gone away. Buyers have moved up. There's still support at 374, but just know if anything goes wrong, there ain't shit holding up to 370. We'll look and see if there's that support still there. I always enter these trades too early. I didn't take this trade down here. I'm missing this trade right now. I'm live streaming with you guys, so I'm not gonna risk everything. You guys can take this trade. Watching a lot of calls with high algo scores on XBI. June 24th, 68C. They're split up across. There's two sweeps and a split. 154,000, 209,000, 99,000 XBI. We'll check in with Tesla real quick. We are getting that squeeze higher right now, starting to squeeze some shorts out. Getting up to that 690 level, 700, 710 price target above. This is Tesla. One test, two tests. Squeeze should happen above 710. Lots of supply here between 690 and 710. Now breaking above VWAP currently. No. So I'll take the opposite side of that trade all the time. I don't mind. I don't mind there not being any money in SPY calls. I'll jump in them. This could be the rip higher right here. They could have leaked it at this point. That wouldn't shock me that it's been leaked. These calls, those 380s are still now right now. Just as a, they're only $2.18, right? How much were they earlier? So this trade right here, watch my cursor. We're up at like 38, 240. Could have been slightly higher. I got out, I think, somewhere in here. I think I got out like right here. Puts, we now have, we started the day with 56,000 puts. We're now at 96,000 puts on that 377 strike. For myself, now coming at it, it's 130, and look at that, right? Nice little move up. If you're day trading this, it's a dangerous trade. There's real risk. That's pure gambling. Everything in here, I promise you, is pure gambling. If you took this trade from here to here, it's pure gambling. I don't know. I don't know what else to say to you here. It's pure gambling. It's so easy for us to. It's so easy. I can't express to you how easy it is. To see, it's so easy right here. This half an hour for high volatility. Like it really is. Unless there's something that you know that I don't know as a retail market participant. It's just pure fucking gambling. That's what it is. And if you get that reversal, your money's gone. Well, I would say this. If you're going to take, I shouldn't say that. What I would say to you is, if you're going to take this, if you're going to take that risk here, if you're going to take that risk here and be like, fuck it, I'm going long cap. If like I'm buying this now, cap it on wait. The one thing I would say to you is, watch my cursor on the left here. If it does fail down here, I wouldn't sell what you're in. You're already fucked. I would look for a bottom down here and add to that position. To make your money back to at least break even or make money heading higher. Risk reward's difficult here. It's a challenge. I'll be honest. I mean, we can lay it out for you. I mean, you can take this trade here, be ahead of the game. I get that, wanting to do that here. But on my left hand side here, my cursor, if you're looking at this, if there is that weakness heading down into 1:30, 2 o'clock or so, you're going to get trapped. And the worst part traders do is, especially at an event like today, let's say this dips down. Let's say this fails. We're in an event-driven day like today, the worst thing you could do would be to sell. Normally, I'd sell. I'd try to get out as quickly as possible because you're still likely to get that rip higher up there. You're still likely to get that trade and make money on that trade because there's times you should be selling. Give these trades up right if they start to roll over because we could just keep going down. Event-driven day like today, start thinking ahead of when we go into events and start thinking about what are the possibilities. And how am I going to manage that trade? If I'm going to take a long here right now, let's say you take a long right here, right now, heading into this FOMC. You have to tell yourself, what do I do here, right? If we dump it into FOMC statement, Do I dump my calls? Do I add to them? No, you'd stay in them and wait. Then you'd have to wait and be trapped in whatever the statement is. If the statement is good, you then pile in like 30, 40, 60% of your position down here so you can make the loss back and capture some run up. If you wanted to go in early, I understand that too, to be an aggressive trader. If I wasn't on screen right now, I'd probably fucking be in this trade right now, I'll be honest with you. I'd be on these calls right now. But I'm not fucking here for you to lose all your fucking money. There's other places I can make money here. These things you got to be really fucking fast. And you got to be ready to commit and then be ready to cut it all loose if the FOMC is ugly. We are trading higher right now. I am watching the 380Cs. I like them. And I'd really like, let's talk about that as well. I like the 380Cs. We also like the 385s at 73 cents. I also like 390s at 17 cents. I like all three of those strikes. I'd really like to see the 380s at like fucking 80 cents. I'll be honest. I'm a cheap fuck. I want to see them at like 80 fucking cents. And I want to buy those to go to $2 or $3. And then I want to jump into 385Cs and 390Cs. Fucking throw the whole fucking thing at them. The fucking kitchen sink. If you are going to take longs and it's your whole fucking account, you better have some fucking protection on. Don't fucking ever come to me and be like, I lost 100% of my bank because I fucking went long 0 dates on FOMC. I guess you could if you only had a $1,000 account and you're spending a paycheck to paycheck. I guess I understand that. You ain't got much to fucking lose in that fucking way, do you? But even then, you want to scale into a trade. I mean, at least 50% of the time, I have to scale into trades. At least. The winning trades, I usually have to scale into them. I don't ever usually like full port one time. It's usually like buy some, add some, add some, add some. And that's the real small position, and I know I timed it right. It's tough. Hold on one second. Yeah, I haven't heard shit all day. If they say it's working, then fine. Okay. It's just me then. They just haven't been talking. I'm assuming that they're not because they're waiting for the announcement. Thank you. Yeah, I'm not hearing it on this side. Says it's playing on my side. So I'm listening. And they're maybe I'll try to open it in like a shitty can I have my paperwork? Maybe I'll try to open it in one of those fucking what's the shitty Microsoft Edge? God, Microsoft Edge sucks. What a shit dumper. They're having issues with their website right now.
You're listening to Trade the News. Is not.
All right, this one's working. Good. Okay. That's good. We're good. We're good to go. Google Chrome is not fucking having fun with Google Chrome is not fucking happy with Trade the News, but Microsoft Edge is today, so we're good to go. We're ready to rock. I just did a test and it's working. Just reloaded it. My wife was on the phone with Trade the News. I'm going to read something to you now. Now, this is a preview of the FOMC interest rate decision and updated SEP expectation expected at 2 o'clock. Chairman's press conference is at 14:30. This is GMT, or excuse me, 18:30 GMT. Let's start at the beginning. The statement is expected at 1400 Eastern Standard Time, New York time, Wall Street time, 1800 GMT. Chairman's press conference is at 14:30 Eastern Standard Time, 18:30 GMT. The Fed messaging has moved to accepting two more 50 BPS moves into June and July, and using those higher rates to slow excess demand into balance and constrain supply. Fed speakers have also acknowledged that the economy could dip, but remain optimistic that tighter policy will not lead to a sustained downturn, and that a softish landing, as Powell put it, is still possible. To that end, today's statement might remove the May commentary about China lockdowns exasperating supply chain issues, though remarks on the effects of the Ukraine invasion will likely remain in place. Last Friday's hot CPI numbers have stimulated speculation that the Fed could get more aggressive with a 75 basis point move today. Indeed, separate reports from multiple news outlets on Monday said the recent string of troubling inflation reports will likely lead the Fed to consider a surprise 75 BPS move, resorting to a last-minute change in the plans that have been laid out for weeks. Risks coming off looking a bit panicky and goes against Chairman Powell's general aversion to surprising markets. But the absence of any signs of inflation easing appears to be driving the FOMC to strongly consider a bigger move today. Fed speakers have established that plans could change quickly if the data does not develop as they expect. So it would be reasonable for the committee to reemphasize this point today and make clear that a bigger than 50 BPS rate move is appropriate either today or at next month's meeting after another round of data is in. So key on this right now is even if they don't give the 75 BPS today, you might hear in the question and answer or even in the statement that it could be on the table for July. Fed speakers have established that plans could change quickly. Let me go back to this. Resorting to a last-minute change in the plans that have been laid out for weeks, risks coming off looking a bit panicky goes against Chairman Powell's general aversion to surprising markets. But the absence of any signs of inflation easing appears to be driving the FOMC to strongly consider a bigger move today. Fed speakers have established that plans could change quickly if the data does not develop as they expect. So it would be reasonable for the committee to reemphasize this point today and make it clear that a bigger than 50 BPS rate move is appropriate, either today or at next month's meeting after another round of data is in. If the Fed sticks with a 50 BPS move, there may be a vocal, hawkish dissenter urging bigger increments. The last time the Fed raised rates by 75 BPS was nearly 3 decades ago in 1994, when central bankers were moving to head off a potential rise of inflation. Updated summary of economic projections, the SEP, and dot plot. So this is a preview put out. I want to show you guys this. So this is this right here. You get this on Bloomberg terminals, okay? The Fed's quarterly SEP update could see some tweaks after the latest round of rough inflation data. The dot plot will see bigger moves to reflect the steeper climb in rates ahead. The median call for year-end 2022 could jump to around 3.5% from 1.875 in March. If the 2023 and 2024 dots forecast the rates won't rise much beyond that, it could be taken as a small victory that most of the projected rate hikes will be finished by year end, especially if the implied terminal rate is below 4%. This is key. I talked about this If you bring rates forward and the total rate hasn't changed, it's actually positive on the market. You don't want to see them add another 25 BPS today to the dot plot. Projections may also be impacted by the reshuffle of personnel at the central bank, as 2 new Fed govs, Cook and Jefferson, will participate in the latest forecast. The 2 new govs could sway the median estimate of the long-run neutral level of the Fed funds rate, which went from 2.5 to 2.37 in March. Presuming that the new governors start at 2.25, where the plurality of votes were in March, 6 out of 15 members, it could bring the long-run neutral forecast down to 2.25%. Today, though, in and of itself would not be a clear signal from the Fed that any plans to halt the rise to neutral any sooner. The presser. At the early May press conference, Chair Powell said that there was some evidence that core PCE was peaking and that a 75 BPS hike was not being actively considered. He may be less comfortable with his assertion. Remember this, at this presser last time, okay? Presser is key for the rest of today, okay? He may be less comfortable with his assertion on PCE this time around, and after the most recent inflation data, we'll have to explain how the Fed came around so quickly to the idea of 75 BPS increments after putting the market on notice that 50 would be the preferred pace of tightening. With today's acceleration and rate tightening, Powell will confirm that the Fed is squarely focused on fighting inflation and ensuring inflation expectations don't become unmoored. On the bright side, he will extol an economy that has seen, hold on here, strong employment and growth figures, and may note that the Fed is now more confident that the financial system and economy have resilience to withstand a rapid normalization of monetary policy. He may not even argue that the sooner rates move to the neutral level, the better chances are that a more severe economic downturn can be averted. Powell likely won't get pinned down on where neutral lies, but could say the Fed intends to reach it this year. On the balance sheet, on the May 4th FOMC meeting, the Fed confirmed initially monthly Treasury bond runoff cap at $30 billion and $17.5 billion a month for mortgage-backed securities will rise to $60 billion. Treasury caps at $35 billion for MBS in 3 months. Now, this is important for you to be reading right now or to be listening to. This is the preview that's given to hedge funds. So I want you to be aware of this as we move into the FOMC announcement. Or statement, I should say. Brad, you driving a dump truck, brother? Let's see what you guys are saying up here. Eric, good to see you in the stream, brother.
We're inside 15 minutes now. The FOMC statement. We've seen a slight give back in U.S. bond markets. 341 in the U.S. 10-year yield down 6. The yield down 6 basis points. Price still higher by about a half a point in the U.S. 10-year. The 2-year at just below 335.
Did you guys just
the dollar index is fractionally lower, and U.S. equity markets are holding on to gains of about 0.9%, and the S&P minis at 37.75.
Good to see you, Tomas. Good to see you, Michael King.
Gold futures at 18.19 are up 1/3% heading into the FOMC meeting, and the VIX at 30.70 is down about 6%.
Yeah. All right, right on. You guys can hear him? Hells yeah. We're ready to fucking go. You guys all fucking pumped and ready for this shit? Bulls and
U.S. 2 10-year spread at about 7 basis points as we approach the FOMC statement.
Hi, Carolina. It's awesome to see
the market expectations are generally for a 75 basis point hike be announced here at the top of the hour.
Just want to give you a heads up that there are a lot of HFTs right now on 377p expiring on today's 615. They're probably betting on some weakness into this Fed. I gave you the preview earlier. I'm going to put it back up on the screen here for a moment for you. This is the one that's given to anyone that's on Bloomberg terminals. So I'm going to show this to you briefly real quick. Take a quick snip of it on your computer, and I could do a snap this for you. And what I'll try to do is post this on Twitter real quick. I'll post this right now on Twitter if I can. Let me see. I'm going to post this for people so they can see this on Twitter. Just a second here. Why, you guys? This is important information that you need to have. What you do is print this out on a piece of paper if you can, right? And what you do is you highlight it as the as the statement comes out, and as the presser comes out. When he starts to speak, you can look for what he says versus what's expected, right? So I'm going to post this on Twitter real quick for you. See a little bit of rollover. Talked about that already, right? I'm going to post this publicly on Twitter. So that everybody gets a little piece of this action. Just a second here. Hold on here a minute. I'm almost there. Just all right, so I just dropped that on regular Twitter. Don't ever fucking pay anybody for fucking bullshit out there. Only free stream out there. Only free stream. Only free subscriptions. Join us on @CaptainsAlpha. Follow me on Twitter if you can. Ask questions in the chat. Talk to your fellow traders. You're all retail traders. I don't care if you're a bear or a bull. You shouldn't be nasty to each other. You guys should always be trying to help each other to make money. I'm shocked that hedge funds and banks can turn you on each other. Shocked. Insane. Mute and ban the trolls. Always free sub. Always. Got a little dip buy going on down here. We had the 380Cs. We're down to $1.86. We know, right, that $1.86 was the opening price on 380Cs. So we're tracking that all day long. Talked about that this morning, right? Keeping an eyeball. Keeping an eyeball on the price of options. I still want them cheaper. I want it at like 80 cents. I want that dip. Hell yeah, pirate forever. FOMC coming out with a statement here. It's 1:53. We got 7 minutes left. We're going to pay attention to Trade the News. They're over there cracking their knuckles, getting their microphones ready to rock. Got a little dip buy already coming in the SPY. People buying that dip, getting ready.
You're listening to Trade the News.
We're going to fucking do this. Oh, man. Now we're up to 212. Coming to that 2 o'clock. I think I might buy this dip at some point. I'm getting itchy now. I should have bought that 186. Let me know in the comments what you guys are doing. Yeah, get your diapers on. You guys ready to see some crazy shit? I want you to be aware of this hard dip down here. You see this 374 down here. Some good supply coming in right now. I want you to know buyers are stepping in currently. We didn't have this before. This is all new down here. Price target above, initial price target above 382. Not much above it, right? Clear skies to 389. Those are your two targets for today. First one, 382. Take some money off. Re-enter the trade a second time. You got the trade coming up here at 2 p.m. I'm buying some fucking calls. Fuck this shit. I ain't waiting. All right, I'm in some 380s. I ain't fucking around with this. I'm going to hold these 380s and a 382, and I'm going to pick up some 39. I'm going to buy some fucking 390s, too. You're so goddamn cheap. 21 cents. Fuck it. Yeah, there we go. There we go. Let's go, baby. I'm in. We're printing. We're already fucking printing. We're fucking up 220 up to 240 now. They're down to 186. 390 up to 24 cents right now. Fucking long this market, bitch. 382. Bring it to me. Bring me 382. Bring me 382. The rejection. Don't forget above. Keep calm around these parts. See this mark right here at 379, 380. You're gonna get a little bit of resistance here. Bump in the road. Remember that. We're gonna be listening right now.
News Broadcast Network.
All right, this is working. Only got a few minutes left. 4 minutes left until the Dude, I got TQQ calls coming in. Boatloads. Crazy TQQ calls coming in right now. June 17th, 25C. Truckloads split up. High algo score. 617, 25C. 617, 26.25C. On TQQ. Slam that button. Got flow going our way. Got calls going our way. Waiting to see if we can get it. Still have a gap to fill in the VIX down to at least 28. Going to keep a close eye on VIX. See if we can get that VIX dumped down to 27. Let's mark it at 27.8. Maybe 28.
Just a few minutes to the top of the hour in the FOMC policy decision. Again, the consensus expectation remains for a 50 basis point increase, but that has been leaning towards 75 after reporting this week suggested that the Fed is taking a hard look at a bigger increment. When the last time the Fed raised rates by 75 basis points was 28 years ago in 1994.
Never forget, if you get a surprise rate decision
We'll be looking
today,
at changes in the dot plot to reflect the more aggressive Fed tightening that's expected in the next year or so.
if you get a surprise decision
So note
today,
there are two new Fed governors that will be weighing in the dot plot and the latest forecasts for the SEP.
a free trade is putback spreads, right? Ratio spreads. You just throw some money at them. They pay for themselves or they print hard. They at least break even. Sometimes they actually make money. And you can cut legs off them too. Never, ever be a bull and not have putback spreads on. Well, not ever, but there are key places and times to have them on. Free trade. Here we go, baby. Now tracking 377.03. Be long this market. 378. 378.20. Pumping. These are these first two places we talked about here, right? 2 minutes left until the statement comes out. Don't forget, last thing we talked about this morning was if we get a ripper, if there is a ripper, you got to pay attention to what the fuck J-Pow says in that goddamn presser. That presser can stifle any rip. Just remember that, okay? Be careful. Time your trades. Know when to take profit. Wait for the presser. Get back into the trade. If it's a good presser, we'll make another leg up into the close today.
1 minute to the FOMC rate decision.
Otis, 1 basis point increase, please. Tom Pacheco's here, right on. Butchlin's here, Steven's here, Tom's here, Ergo's here. Hut's in the house. Brad Kesner, baby. Lord Penty's in the house. Mark Holland. Everybody's here. Jess Brother is here. Let's take a quick look at Tesla. Oh, here we go. 378.63. Tesla could squeeze higher at 710 or higher. You watch this 710 if you're a Tesla bull. If you're a Tesla bull, watch that 710. You want to see
Just
a break
few
above that.
Few seconds to the Fed announcement.
If you're a Tesla bull, right, you trade that to 710, get out, jump back in. If you're able to break above 710 to blast off and squeeze higher. Now trading 378.63.
75 basis points, 75 basis point increase. And the 75 basis point increase to rates. IOER also going up 75 basis points.
Oh, shit.
5 officials now forecast rates above 4% in 2023.
Kansas City Fed's George dissenting in favor of 50 basis points, so a dissenter on the dovish side from Fed's George.
Median inflation forecast for 2022 up to 5.2%, up to 2.6% in 2023. For the 2024 Fed funds rate, the median view at 3.4%.
Oh, shit. Hold on there.
3.8% for 2024 at 3.4%.
Calls are banging right now.
2022, it rises to 3.4% as well. So the median dot now at 3.4% by the end of this year.
Fed reiterating they're strongly committed to returning inflation to 2% target level. Repeats they're highly attentive to inflation risks.
Fed just reiterating they're prepared to adjust policy stance if risks emerge that could impede the attainment of its goals.
So we got
Fed saying inflation remains elevated, reflecting pandemic-related supply and demand imbalances, higher energy prices, and broader price pressures. Fed saying balance sheet reduction will proceed as planned.
Look at this wildness.
As expected, the Fed's median dot is coming down significantly for 2022. They now see growth at 1.7% from 2.8% forecasted in March.
Rolling forward the dot plot. Everything's still in line. There's some rolling forward on the dot plot so far. 75 basis points were dropped earlier. Nothing so far that's out of line with the preview from this morning. Taking 390s off the table. I'm still have some 380s on right now. I took some at when we hit 380. I took the 380s off, but I still have 100 on 100 contracts on 380. Here's your first.
Again, summarizing the dot plot update from the Fed. They raised the median forecast for end of 2022 to just under 3.4% from 1.9% prior. The dot plot forecast peaking out at 3.75% in 2023. Long run forecast rising to 2.5%.
Yeah, 2.5% is what is expected, right? That's the same as expected. 3.5% is still expected. 1.875 in March. Now 3.5 is in line. None of that's changed. Dot plot being pushed forward. Try to look through the numbers right now real quick on the side here. See if there's anything crazy in here. 390's lost all premium. There's no expectation that we're going to trade there today. Be careful. We could trade down at this point. And the top so far looks like 380. I'm losing some money in 380. I'm down $1.60 on 100 rack of calls there. Sold at like 270 on some nice calls on the first rip high.
The overall market reaction is somewhat muted as the 75 basis point hike was essentially forecasted in the Wall Street Journal story earlier this week. Well, the press conference ahead of us in about 25 minutes' time. But bond yields are essentially little change. We've seen a little bit of selling at the short end of the curve up to 343 in the U.S. 2-year, but the 10-year largely in line with where it was trading ahead of the FOMC statement. The dollar index remains marginally higher, and stocks to this point have held into positive territory, but up a little less so, 0.5% or so in the S&P minis.
Yeah, that's my take. Muted. I'm not seeing 390 as being viable today. 382 possible. But definitely not. I don't see 390 at this point. So, but event risk will roll off. Now, there's something else to take into consideration is the presser at 230. And the preview that I gave to you earlier, this is not the most positive. I would label it a slightly negative FOMC statement. It's not bad. It's not great. It's slightly less than neutral. They did roll the dot plot forward. They haven't changed it that I can see so far from the paperwork that I've got in front of me. There is one, with that said, even in the preview they said you'll probably find JPOW will try to come out positive in the presser. So I would look towards the presser as hopefully and more than likely going to be a positive event. He's probably also watching market reaction at this time. So if you're trapped in any way, shape, or form, I would look towards the presser and I'm going to be looking at the presser as a place to buy and get back in once more. So we'll see what happens into the presser at 2:30 p.m. It's 2:06. We've got 24 minutes left. If we had 50 BPS and we blasted off and we didn't move the dot plot, well, of course we're going to move the dot plot, but they're pulling it forward. They didn't give any numbers that seemed to suggest that they were adding 25 basis points onto the already projected 3.5% down. Is it 3.5% down the road? Get this right? Go back here. So I'll look for another entry as we head into the presser. Now, 374 was the intraday low. We also know that the next low is down at 370 down here, right? We knew this from this morning. So we're going to keep our eyes on this 370 mark. See if this is a good dip buying opportunity or not down here. Try to keep this all matched up right where we are right now. So we can raise this up a little bit. We'll have this match right here, this 374, 375. You want to see this red bar stay. You see this white line right here. If you see this white line go away, it's going to show weakness. It has not gone away at this time. And there is still firm support at 370. Remember, we also have event risk rolling off. We also have event risk rolling off the event. This wasn't as negative as it could be. And I'm going to expect Jerome Powell to be positive in his presser. The one thing that the market's not getting is that huge face ripper, right? You're not getting that move up to 390 into the bell. You're not going to get that move up into 400 into next week currently. And he's a guarantee that him or his minions are watching the market reaction right now. So I'm going to expect him to not be as negative. If we traded up here into 390, let's say, or even 400 into Monday, you would see a more aggressive, hawkish approach from the little Fed chairs and Chair Powell. I'm going to expect we'll have some weakness into the presser. So between now and let's call it 2:30 this afternoon, we'll move this timer over to 2:30. We got 2 o'clock, 2:30. I'm going to expect weakness into that presser, and hopefully he gives some guidance that's not, overly hawkish. If he does if he is hawkish into this presser, I've already posted what to look for in the presser. You'll be looking for any kind of hawkishness or any kind of bullishness or just a neutral stance in that presser. My assumption is it's going to be a positive presser at this point, and that you will see the market trade higher over time. Now, this leads into the post that I made yesterday on @CaptainsAlpha, where I told you in that post, that you could see a subdued move today and not see the Vanna trade until after OPEX. That would be when the largest hedges come into the market. And currently at this time, I haven't seen on Flow Algo, I have not seen major hedging enter the market. I've seen none. So it's not like I'm seeing any kind of flow saying doom and gloom. I'm not seeing like multi-million-dollar trades against the market right now. I'm not seeing like $20 million hedges down to 620, anything like that. My assumption is they're going to wait to see what J. Powell has to say at 2:30. The event risk is over. My assumption would be that you'll get that Vanna trade later in the week. We'll call it on the 17th, 18th. Remember that you've got Monday being closed. You want to capture those trades before the end of the weekend or be able to enter some kind of call spread that you can monetize on Tuesday and not have to deal with that theta burn heading into Tuesday. And I would be looking for something at this point more subdued.
We've seen the Dow slip into negative territory, the S&P up about 10 handles here in the early moments. Reactionary trade equity futures are a little bit lower here as we wait for the press conference to begin in about 20 minutes time.
So you're going to be looking for some kind of a subdued move. Clearing of the hedges, right? Clear the hedges out is still in play here. This was not a negative statement. It's not positive. I'm going to give it slightly negative. You had like 1 to 100. It was like a 40-45, somewhere in there. And it does really rest upon what the presser is going to be and his foresight. Does he add on 70 or does he increase or fuck with the dot plot down the road, right? Does he say, nah, fuck this. Now we've got 75 BPS on the table for July as well. You're going to be wanting to hear stuff like that. If you don't hear stuff like that, I'm going to expect this more to be a clearing out of hedging heading into the beginning of July, and we're back into the same regime of trading this market down into July again. So you'd be targeting somewhere. You'd be targeting a failure somewhere around that. I'll have to look it up right now real quick. Let me look it up. You'd be looking for some kind of a failure trying to clear out.
Again, overall, taking a look through the data here following the FOMC and looking at the futures market. Futures market are still slightly more hawkish in terms of where we'll end at the end of 2022, with most futures at 3.5% or north closer to 4%, and the median dot plot today rising towards 3.4%. Again, Fed projections coming closer to where the market futures are, but still slightly lower in terms of the end of this year.
You'll end up looking for a failure at some point. We talked about that failure at 400. You say if it was 50 BPS, yeah, we could probably get up and clear out some of the gaps up at 424 or 418 or wherever that is, and possibly even clear out 410. You're probably going to see a failure somewhere because of this FOMC statement without any guidance yet from Chair Powell himself. You'll see a failure of trying to clear out that 390, possibly still 400, but likely clear out 390, get cheap puts once again, and you'll see us trade back down into that channel, try to tag 360, and overall 320 down the road. You are going to see that down the road at some point. So if you're a bear, out there. You're waiting still for for Chair Fed or for Chair Powell, and you're going to look for this market to roll over heading into July and August, looking for lower prices down to 320, 360, 320, certainly on the table. I also posted once this past week that if you start to break down in one go that 320 level, it's a clear shot down at 220. Believe it or not, it really is a clear shot straight down. There's not much holding up the market from there. They're not going to do it, I don't think, right now. Logically speaking, the stress tests on the banks can't handle a fall of 50%, and even that stress test is faulty. So we know that's not going to happen. And then timeline with the economy, more than likely, you'll see them clear puts out, bring it up higher, have it fail, come back down, and we'll start taking out those lower lows over time. You do want some of this stuff to match up to economic conditions. You know, they're not going to. They could, if there's a bank that's Fairfield knows something that nobody else knows. Sure, they'll send it down 50% in one go over a few weeks. But in reality, they're going to try to match this softish landing. The soft landing is going to be very low, but they're going to try to pump or take this market down in increments of 17%, 30% max. Do it 2 or 3 times, and maybe we'll have a capitulation moment. It could be a year from now. My target's like January of 2024. So that's a long process for this to happen. Banks more than likely at this point are going to do the same thing unless they can't find people to buy, of course, or that we play musical chairs to enough where no more banks are willing to buy, knowing that we're heading down. We could get that capitulation moment sooner if you're really bearish out there. If you're looking for that really last bearish move to come sooner than January 2024, it might fucking come sooner than later, right? And those things can change over time. The only point being is I would not be expecting, unless Chair Powell says something different, would not be expecting anything above 400. That's probably your max. 400, unless something changes, unless Jay Powell says something different, you're more than likely going to see some kind of rejection over there. We'll get right back down to that major channel that we've been in since January and keep trading this market lower. If you disagree in the comments, let me know. Let me know. Oh, my bad. My Bookmap's paused. My bad. Thank you for letting me know. $381. Yeah, it's still 382 above here. Nothing's changed on that one. I'm here for the thumbnail. What is it saying? If there's a big dump down to 320 or below, seems like a disaster. No, it's not. It's highly unlikely. It's not that it can't happen. There's always risk. There is a dip being bought right now. It's highly unlikely that you'll see a 50% decline today. If it was to happen, it would mean that we've broken more than just something. You want to see this stuff happen as the economy kind of matches up to it or priced into it before it happening. But I don't expect to see like Apple go bankrupt tomorrow. I'm not expecting to see mass layoffs in 2 weeks. I'm not expected to see that stuff. It's a process. Any of you that are old enough to have lived through downturns in the economy and the stock market, it's a process. On a time frame, it's usually not all in one day. When in 07, 08, when it happened like that, there were other things at play. There were defects. We had mass fraud. Well, we have mass fraud today too, but it's not the same. It's not the same. So let's just go back, and before Jay Powell goes on, we'll talk about that again. You're going to look for what this was this statement was neutral to slightly negative neutral. It is a good thing that Jay Powell dropped the news that we were getting 75 basis points. The dot plot we need more clarification on in the presser, most certainly, and without a doubt they're on track. They're on track. We need more clarification in the presser for sure. You'll see a muted. You'll see vol compression, and then you're also, which is going to make the market more stable, and you're also going to see clearing out of hedging I'm not seeing right now. I'm not seeing huge hedging coming in. That's showing you that the banks are still not ready to re-hedge. I would expect them to leave their puts that they already have on heading into OPEX for the rebalance. And I'm going to not expect any kind of a Vanna trade except for something different coming out of J Powell's mouth, or those hedges rolling off on the 17th. You can always go back and read the post that I made last night. It does cover this type of situation from today. It's on at Captain's Alpha from last night. It does cover this neutral stance by the Fed. Yeah, you guys can always disagree with me. You guys can always disagree. I always appreciate anyone that wants to disagree and say we're going to drop 50% the next couple weeks. Hey, what's up? Your wife's boyfriend, Joe. Good to see you. How you doing, brother? Yeah, I try to take the whole view. I try to take the whole view. I'm definitely not saying we can't trade to 360 from now into. I think 360 is on the table from now into the 30th. It's more on the table depending on what Jay Powell has to say at 2:30. But I don't see 320 as of today for what we have in that statement. I'm not seeing 320. No way, no shape, no how. It's like a 3%, 5% risk currently. That you see that like crash, that 50% drawdown this week into next week. And most certainly if you're a hedge fund guy, if you're a bank guy, you want cheaper puts once again. So I'm going to just call this muted. You'll see the market be bought into 230. You're going to also wait then for Jay Powell's presser and see what his take is, and then we'll relook at what our stance is from that point forward, heading into the next week or two. Yeah, so the market is catching a bid right now. There are no hedges coming into the market right now. We've got 382 as a top. I would expect somewhere around that 382 mark is the top for today, unless Jay Powell has something else to say. There's another mark coming up here, 385. We might get that 385 into the bell. And then I would say sideways and down into the rebalancing. And then you will see the Vanna trade kick in at some point on the 17th or even the day after. You might not see it quite on the 17th. You might see it on the 21st. So if you don't see the Vanna trade coming into the 17th, and let's say we trade sideways and down because of rebalancing, let's say into Friday, if we're down on Friday close, I would most certainly be a buyer of calls on that close on Friday. Most certainly. Yeah, right now they're saying Lawrence has got it right. So I want you guys to understand. Some of you guys do or don't know this. So they tell us, pre-tell us months before. So there's an SEP update, right? And the dot plot will see bigger moves to reflect steeper climb in the red's head. The median call for year-end 2022 could jump to around 3.5%. In March, we were at 1.875%. So this stuff is all still in line. So far, I'm not seeing anything here. I'm reading through this stuff right now. I'm not seeing anything that's other than that this moment. Nothing glaring. Nothing that's oh shit, we're fucked today. I still think we're fucked. I just don't think we're fucked to 320 today. I don't think we see 320 today. And I don't really fucking care. If we go to 320, my putback spreads are going to print like a motherfucker, so I could care less. Give a rat's ass. Yeah, Tuesday. We've talked about that many times that we're closed on Monday. We've got Juneteenth, a big day. Hey, thanks, Ozzy. Yeah, so we're going to sit here and watch this. You are seeing some support leave here at 374. Daily support is 370. Want you to know this number down here as well. Your intraday support supply zone is at 370. If we do lose this support, watch my cursor on the left here at 374. Look for 370 into the presser possibly. Below, you've got 360 as your next level down below. Straight shot down to 360. If the Fed chair is hawkish, you will see 360 into end of month. Six minutes until the Fed presser. I will bring that up for you. We'll listen to it live together alongside Trade the News. So I've got it up here in the background. And we'll play it. We'll play the Fed presser as Jay Powell talks. We'll see the market reaction as he speaks. Yeah, RIP canceled. New support down at 370. $374 is only intraday support. Fucking day trading support. I always thought raising rates into zero or negative growth was bad. Lame, they goaded them into tipping us into a recession, LOL. Hedge fund because they have way too much power. Absolutely. Yeah, I'm going to re-enter some calls here in just a minute. We're watching HFTs are buying 380Cs. They're in for 123,000 contracts at $1.10. I'm going to see if I can enter some of these at like 80, 90 cents. $380Cs. Same trade. They're cranking now. There's some nice little trades in here right now. I don't know if you guys day trade or not, but there's some really beautiful trades right now. Some nice swings in the options chain. We're getting like 20, 30 point swings in the call side right now. 40-cent trades. Call side of 0 to 8. It's going wild. Getting all sweaty here. And I got the AC on. I'm just watching these 380Cs right now. Got 2 minutes left until the presser starts. Come on, baby. Give me them cheap fucking calls. Let me know in the chat as we got 1 minute left. Let me know in the chat if you think J Powell is hawkish, neutral, or dovish in his presser. Hawkish, neutral, or dovish.
Crude futures extending a little lower here. Post Fed down almost 3.25% now.
Hell yeah. Bye-bye, crude.
115.12. WTI crude futures as we head into the close of pit trading. The U.S. 10-year yield at 3.43%. The dollar index higher by about 0.1%. Stocks slightly higher as we head into the press conference here from Chairman Powell.
Press conference is starting right now. I've got it up live over here on the side here. I don't know if I can make this smaller or not. See if I can. No, damn it. Can I move this thing? Can I get a detached player?
Chairman Powell now commencing his press conference.
Can I do a detached player?
Powell saying we're moving expeditiously on rates, and we have resolve on price stability. We also have the tools we need to restore price stability.
Back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families.
Powell just emphasizing it's essential that we bring inflation down.
2.5 years and have proved resilient. It is essential that we
by bringing inflation down will help labor.
That benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain.
Once again, referring to the labor market as extremely tight.
Yeah, we need the labor market to. We actually need higher unemployment.
And anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Overall economic activity edged down in the first quarter as unusual.
Powell just acknowledging they are in the process of significantly reducing the balance sheet.
Underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment.
Powell acknowledging that real GDP growth has picked up this quarter.
In part reflecting higher mortgage rates. The tightening in financial conditions that we've seen in recent months should continue to temper growth.
Still seeing demand.
Powell acknowledging the activity he's seeing in the housing sector appears to be softening.
As shown in our summary of economic
also, growth in businesses and fixed investment appears to be slower.
With the median projection
He does expect tightening in the financial conditions to temper demand.
Through 2024. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. FOMC participants expect supply and demand conditions in the labor market to come into better balance, easing the upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises somewhat over the next few years, moving from 3.7% at the end of this year to 4.1% in 2024, levels that are noticeably above the March projections. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core prices rose 4.9%. In May, the 12-month change in the Consumer Price Index came in above expectations at 8.6%, and the change in the core CPI was 6%. Aggregate demand is strong. Supply constraints have been larger and long-lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food and is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. FOMC participants have revised up their projections for inflation this year,
Oil just
particularly
got a
for
bid.
total PCE inflation, given developments in food and energy prices.
XLE just caught a bid.
The median projection is 5.2% this year and falls to 2.6% next year and 2.2% in 2024. Participants continue to see risks to inflation as weighted to the upside. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and price.
UNG looks like it's about to
Powell
fall
saying we
apart.
continue to see risks on the inflation front to the
We are
upside.
acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, resulting in a 1.5%
Powell just acknowledging that their
increase in the target
policy
rate
will
so far
remain
this year.
adaptive.
The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role
Still
in affirming the
substantial
stance of
selling right
monetary
now.
policy. Coming out of our last meeting in May, there was a broad sense on the committee that a 0.5 percentage point increase in the target range should be considered at this meeting if economic and financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook.
What the fuck is with
Since
the
then,
paperwork, dude? He's
inflation
never
has
stayed
again
on script
surprised
in a
to the
presser
upside.
ever.
Some indicators of inflation expectations have risen,
Ever. This is the
and
first time.
projections for inflation this year have been revised up notably.
He's staying on
In
script
response
today.
to these developments, the committee
Powell saying that since the May meeting, inflation has surprised to the
at
upside.
today's meeting. This continues our approach
is
of
not good.
expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than
Powell
projected
saying
in
that
March,
the upside
and
inflation
9
surprise
percentage point above the median
justified a
estimate.
larger increase in rates
The median
of
projection rises
75
further
basis
to
points today.
3.8% at the
Yeah,
end of
he's
next year,
acknowledging that
and
inflation
declines to
spiked.
3.4% in 2024, still above the median longer run value. Of course, these projections
Saying part of today's move was to help anchor inflation expectations at
and no one knows
2%.
with any certainty where the economy will be a year or more from now. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate
Powell noted
increases
the
will
dot
be
plot
appropriate.
projections are not a plan.
The pace of those
No one
changes
knows
will continue
with any
to
certainty
depend
where
on
the
incoming
economy
data
will
and the
be in a
economic
year.
outlook for the economy. Clearly, today's 75 basis point increase is an unusual.
Powell reiterating they'll be looking for compelling evidence inflation is coming down over the coming
From the
months.
perspective of today, either a 50 basis point or a
And the
75
pace of rate
basis
hikes
point
will
increase
depend on the
is
incoming
most
data.
likely at our next meeting.
So
We will,
75 is
however,
on the
make our
table for the
decisions
next
meeting by
meeting.
meeting, and will
Powell
continue
saying he
to
does not expect 75 basis point moves to be common.
Our overarching focus
Powell
is
saying do not expect 75 basis point moves to be common, saying this was an unusually large move.
Fuck yeah, I thought he was saying that we're
Making
open to him.
appropriate monetary
I'm
policy in
long
this
again.
uncertain environment.
Powell saying either 50 or 75 basis point move seems most likely at the next meeting.
Inflation
380s
has
are down at
obviously,
70 cents and now trading at
surprised to the
160,
upside over the past year,
164,
and
170.
further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook.
180.
And we will strive to
184,
avoid adding uncertainty to what
187.
is already an extraordinarily...
Powell reiterating that they need to stay nimble in their policy,
We were highly attentive
and that Fed will try not to add
to
uncertainty.
take the measures necessary to restore price stability. The American economy is very
I always
strong
like trade the news how they interpret.
and well positioned to handle tighter monetary policy.
God, that was a slam.
we
While noting further surprises in inflation could be in store, thus they need to be nimble.
270 to
Everything we
150
do
for a
is in
second.
service to our public
Now up to
mission.
182.
We at the Fed will do everything we can to achieve our...
Powell noting the economy is strong and well positioned to handle tighter policy.
Thank you, and I look forward to your questions.
Okay, so that wasn't
Thank you.
bear. I
Howard
wouldn't call it
Schneider with
hawkish.
Reuters. Two related questions. Chair Powell, did you feel you
Be careful here. The last fucked up questions, and we'll blast to the bottom.
50 basis point hikes in June and July. And would you please give us as detailed a sense as you can of what role you played in reshaping market expectations so quickly on Monday?
Powell started in the Q&A.
So, as you know, we
This is where shit gets messy
always aim to
sometimes.
provide as much clarity as we can about our policy intentions, subject to the inherent uncertainty in the economic outlook, because we think monetary policy is more effective when market participants understand how policy will evolve, when they understand our objective function, our reaction function. And in the current highly unusual circumstances with inflation well above our goal, we think it's helpful to provide even more clarity than usual, again, subject to uncertainty in the outlook.
I'm going to make
So,
382
and I
the
think
price target.
over the course of this year,
High target 385.
financial markets have responded and have generally shown that they understand the path we're laying out. Of course, it remains
Oh,
data
yeah,
dependent.
fucking print 'em.
And so that's what we generally think about guidance. and that's
380s
why
are
we
printing
offer
like a
it.
motherfucker right
And
now.
of course,
I'm
when
sorry for swearing.
I offered that
Shouldn't be
guidance
swearing on stream.
at the last meeting, I did
Now
say that it was subject to
$2.30.
the economy performing about in line with
Come on.
expectations. I also
240.
said that
Here we go. 240, 250,
if
260, baby.
if data came in worse than
265 on
expected,
380s.
then we would consider
Fuck
moving
this
even more
amount.
aggressively. So we got the CPI
Holy
data
shit.
and also some data on inflation expectations late last week,
Sorry.
and we thought
Well, noted that we offered the guidance of 50 basis points. At the last meeting, you said that if data came in worse than expected, they would consider a more aggressive
do it at the
move.
next meeting, and I think
Talk
the
to you
answer
about getting trapped in
is that's
calls.
not where
To
we
hang
are
in
with this.
there.
So we decided we needed to go ahead,
Add.
and so we did. And
Getting nice
that's really-
prints on
that's
zero
really how
dates
we made
right
the
now.
decision.
Thanks for taking our questions. Gina Smilik with the New York
Fuck yeah.
Times.
Powell saying that they thought this was the appropriate thing to do after
Smashing and bashing
the
here.
CPI data last
Coming
week
up on
and a
700,
few other data points.
710.
So obviously,
Look for a top on Tesla
75
between
today. What did
700 and
75
710.
Powell saying they didn't want to wait another 6
We're
weeks
cranking
for a
right now,
larger
baby.
move.
Crank it.
Sure.
Blast
So,
off.
if you take a
309,
step back,
316
what
on
we're looking for is
380Cs.
compelling evidence that inflationary pressures are abating and that inflation is moving back down. And we'd like to see that in the form of a series of declining
Blast off.
monthly inflation readings. That's what we're looking for.
390s
And
still
by
not
this
catching a
point,
bit. Be
we had
conscious of
actually
that,
been
okay?
expecting to see clear
390s are
signs that
catching a
at
bit
least
earlier, but
inflation flattening out and
380s
ideally
banging.
beginning to decline.
Banging trade.
We've said that we'd be data dependent, focused on incoming data.
Look for a top
highly
up
attentive
here,
inflation risks,
382,
the things that I
385
mentioned,
on the day.
to Howard moments ago.
Take some
So
money off the
contrary to
table up here
expectations,
at
inflation again
382.
surprised to
Where we're
the
trading. Look at my
upside.
cursor up here.
Some
Take
indicators
some
of
money off the
inflation
table.
expectations
Leg
have
in for
risen,
385.
and projections of this
You
year
might
have
not
moved
see
up
that trade
notably.
until you
So
see. You might not see
we
that
thought
trade.
strong action was
It's right here.
warranted
You see
at
this has
meeting,
disappeared.
and today we delivered that in the
You
form
might
of a
not see
75
that
basis
trade.
point
That trade to
rate hike,
385
as I
until the
mentioned. So what was
close.
the point of it really is this.
Fuck yeah.
We've been moving rates up expeditiously to more
Powell saying we
levels.
thought a strong action was needed at this
7
meeting.
months since we pivoted and began moving in this
That was
direction.
a nice fucking trade.
We've seen financial conditions tighten, and appropriately so.
Calls, baby.
But the federal funds
Not
rate,
puts,
even after
calls.
this move, is at
Calls.
1.6%.
Remember it.
So, again, the committee
Calls.
is moving rates up expeditiously to more normal
Calls,
levels.
baby.
And we came to the view that
I'll say financial conditions have tightened, and that is appropriate.
So I think that the SEP gives you the levels that people think are appropriate at a given
Powell's
place
like,
in
fuck
time.
your puts.
This was really about the speed with which you would get there.
Yeah, there you
So
go.
as I
Get that
mentioned,
380 up in there. Slam it
75
home.
basis points
Give me
today. I said
382
the
for the
next
second
meeting
pump.
could well be
Give me the-
about
give me
a
the
decision
second pump
between
to
50 and
382.
75. That would put us at the end of the July meeting.
Yeah, pump it
you
up
know,
there.
in that range.
Push it up there,
in
baby.
that more normal
It's probably
range.
700
And
on
that's
Tesla.
a desirable place to
Hold
be
on, I'm in
because
some
you
more
begin
calls,
to
so
have
hold
more
on a second here.
optionality there about the speed
Yeah,
with
Tesla's
which you
going
would
up there.
proceed going
Smashed to
forward.
700.
Just
Oh,
talking about
yeah,
the SEP
fuck yeah,
for a
get up
second.
there. Get up
what
there,
it really
baby.
says is that
Push it.
committee participants widely would like
to
to
the
see
pen.
policy at a modestly
All right, I'm out.
restricted,
I'm out again.
restrictive level at the end of this
Fucking
year.
A.
And that's 6 months from now. And, you know, so
I'm out
much
again.
data
That's too
and so
risky.
much can
It's
happen.
too risky
So
for my
remember
blood.
how highly
If
uncertain
we
this
jump
is.
over 382,
But
I'll
so
grab
that
some
is
more for
generally
385.
a range of 3 to 3.5%. That's where people are.
Hold
And that's,
on here.
that's what
Almost
they want to
fucking
see,
bought some
knowing
puts.
what they know now,
Jesus
and
Christ.
understanding that we
Can't
need
do
to
that
be
shit.
we need to show
Oh,
resolve,
yeah, we
but
got
also be flexible to
151,000 on
incoming data
HFTs
as
on
we see it. If things are
380s
better,
again.
we don't need to do that much. So
380 is the
if
380,
Saying
baby.
SP
Fuck
really
yeah.
says we want to see policy at a modestly restrictive level at the end of this year.
we're looking at next year, and
Says that's generally a range of 3 to 3.5%.
380 was the 380 was the key today.
4%.
And you can see it in the options chain. Everybody's on 380s now, huh? See how that shit goes. Only here with Captain Jim James.
Inflation under control.
Came on live this morning, told you exactly which one to be trading. 380C.
Front loading on rates gives us optionality to speed
$3.03.
on the speed of
That's what we
rates as they move forward.
I don't want to get back in
Steve
again.
Leishman, CNBC. Thank you for taking my question, Mr. Chairman.
See if we can
You have
blast
not
this to
used the phrase in a
385.
long time, monetary policy is in a good place, which is a phrase
Fuck
that you used to use
yeah.
often.
Let's do it.
Now that
Oh
the
man, I gotta
committee
move. Hey,
is
make sure you put some
projecting
stop
4%
losses. I'm in
on
some more
or
calls. Make sure you put
3.8%
some
next
stop
year in terms of the
losses.
funds rate, which is
They might
similar
try
to
to
where the
clear them
market
out,
is
right?
now,
They'll
the
snap it. They'll
futures
snap
market
it down
at 4%
like
funds rate next
it's
year.
at 350 right now.
Do you think
They'll
that's
snap
a
it down to
level
like 260 or
that is
something
going to be
insane.
sufficiently
Get out
high
and then
enough
jump back in.
to deal with and
Put
bring
stop
down
losses
the
on these
inflation
zero
problem?
dates.
And just as a follow-up, could you break that apart for me? How much of that is restrictive, and how much
Oh,
of that is
yeah.
the normal positive rate that ought to be embedded or not, in
Give
your
me
opinion,
385.
in the funds rate? Thank you.
Give me 385.
Sure,
I
so
want
the question
385. Give me
really is,
385.
how high does the rate really need to go? And this is, you know, the estimates on
Let's
the
keep
committee
our eyes here
are
and make
in
sure we
that
don't get a
range of
rejection.
3.5 to 4%.
Grinding through right now. Grinding
And how do you
through.
think about that? Well,
See
you
if it
can
gets
think about
rejected here.
the
See if it keeps
longer run
pumping.
neutral rate. You can compare it to that, and we think that's in the mid twos.
385Cs are only
You
$1
can look,
right now.
Frankly, at broader financial
Keep your-
conditions.
all right,
you can
so-
look at
all right,
asset
I just got
prices. You
stopped
can look
out.
at the effect you're having
Okay,
on
so
the economy,
look,
rates, asset
keep an
prices,
eye on
credit
385Cs.
spreads. All of those things go into that.
I just got
You can-
stopped
you can
out of
also
fucking
look at
calls.
the yield curve and ask
Okay, so
all
keep an
along
eye
the
on
yield curve,
385Cs.
where
They're
is
down
the
at 89
policy
cents
rate?
right
So
now, 88
for much
cents,
of the
83
yield curve
cents.
now,
Huge bid ask
real
wide.
rates are
Don't be buying them yet.
That's not true. At
But
the
look
short
to get
end.
into some
At the short end of the
385Cs.
yield
Jump
curve
out of the
in the early
380Cs
years,
and
you
look to
don't
grab
have real
385C.
You have negative rates still.
They'll give you a better print.
That really is one data point. It's one part of financial conditions. So I think I
Oh,
have to
yeah,
look
here
at
we
it this
go.
way. We move the policy rate. That affects financial conditions, and
I
that
want to see
affects
that
the
next
economy.
pump. Let's see if we can get
You know,
that
we have,
385
of
up
course,
there.
rigorous ways to
we got
think
some
about
sellers
it.
where?
But
Where are the
ultimately,
sellers
it
at
comes
above?
down to, do we think financial conditions are in a place where they're having the desired effect?
It looks like they're right here
on
at 382
the economy? And that
right
desired
now. I want to
effect
see
is
more
we'd like
supply
to
go
see,
higher. I want to see
demand
so and we got some
Demand is very hot still in the
support
economy.
here.
We'd
at
like to see the labor
380.17.
market
Keep an eye on
getting better in
380.17.
balance between supply and demand.
See right there?
And that can happen both from supply
380.36.
and demand. Right now, demand
So
is
put
substantially
this
higher
back.
than available
380.
supply.
Powell saying demand is
we
still
think there's a
very
lot of
hot in the economy.
Demand. Those are the things we can affect with our policy tools.
So
there are
what,
many
with
things we
inflation?
can
Saying that they'd like to see demand moderating.
the things, the commodity price issues that we're having around the world due to the war in
I'm going to try to
Ukraine
buy this
and,
dip here at 380.
and
Also saying, reiterating that they'd like to see the labor market in better balance between supply and demand.
pushing upward on inflation. So that's really how I think
Hold on
I would
here.
think about it.
But this 3.8%, 4% get it done.
BUS
Powell saying he feels there's a
377.46.
role for the Fed in moderating
I think
labor
it's
demand.
certainly in the range of plausible numbers. I think we'll know when we get there. Really, I mean,
378.93.
honestly, that would be, you would have positive real rates. I think, and
378.93.
inflation coming down by then. I think you'd have positive real rates across the curve. I think that the neutral rate
Keep
is
your
pretty
eyes
low
over
these
here, okay?
days. So I would think it would, but you know what? We're gonna find that out empirically. We're not going to be completely model driven about this. We're going to be looking at this, keeping our eyes open and reacting to incoming data, both on financial conditions and
so
on
you guys can see where
what's
I'm looking
happening in
here.
the economy.
So see this support right here?
Powell saying the Fed will not be completely model-driven in their approach, because neutral rate is pretty low these days.
To work through expectations, and now obviously this decision was something quite different from how you
Saying we're going to find out the neutral rate empirically.
The intermeeting period. And I know you just said that what changed was really the inflation data, the inflation expectations.
35 is now down to
data.
68.70 cents. I'm going to try to buy some of these 385s.
Was there something you saw that was unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before?
So if you look at we look at a broad range of inflation
You like the
expectations.
split screen, Gary?
So you've got the public, you've got
Trade the
surveys
news
of the
too
public
loud.
and of experts, and you've also got market-based. And I think if you look across that
I turn
broad
trade the news down.
range of data,
Thanks
what
for the
you
heads up
see
on that,
is
Ergo.
that expectations are still in the place, very much in the place, where short-term
So
inflation is
so
going
if
to
you're
be
watching
high,
this right here,
but
right? I want
comes
you to
down
watch my
sharply
cursor here.
over the next couple of years.
See this
that's really where
378,
inflation
60 down
expectations are.
here?
And also, as you get away
See
from
where we
this
are right now? It's
episode,
this little
they
band
get
right here.
back
See
down
the
close to
green
2%.
stop buyers
And
right
so
here? Sellers are
this is
still
really
slightly
very important to
a
us
little bit in
that remain
charge.
the case. And I think
Buyers,
if you
big
look
fight going on right
for
here.
most measures, most of the time,
You either
that's
be
what
looking
you
to be
see.
buying where my cursor is
So
right
even
here, or
if we even
slightly
see a
lower at
couple
this
of indicators
378.
that
You can even do
bring that into
ABC,
question,
right? You buy
Saying
some
data
here,
shows
you buy some
inflation
there, and you buy
expectations
some
are still
here
in place where
for a
short-term
rip high.
inflation is high, but comes down sharply over the medium term in the next few years.
It might be revised. Nonetheless, it was quite eye-catching, and we noticed that. We also noticed that the index of common inflation expectations at the
Sweating
board.
bullets right
Powell
now.
noting last week's Michigan reading was quite eye-catching.
So
baby.
we're watching that, and we're thinking, this is something we need to take seriously. And that is one of the factors, as I mentioned, one of the factors in our deciding to move ahead with 75 basis points today was what we saw in inflation expectations. We're absolutely determined to keep them
So that's
anchored
382
at
right
2%. That was one of the reasons. The other was just the CPI reading.
So if you saw a movement like that again, another tick up in inflation expectations.
Come on, give me some money.
Would that put a
Give
75
me some
or
money.
even
Dude, I
100
want
basis
these
point increase
385s
in
just
play,
flip to like $2
at your
or
next
$3.
meeting?
You know, I'll just say we're going to react to the incoming data and appropriately, I think. So I wouldn't want to put a number on what that might be. The main thing is to get rates up, and then pretty soon we'll be in an area where we're, I think, as you get closer to the end of the year, you're in a range where you've got restrictive policy, which is appropriate. 40-year highs in inflation. We think that policy is going to need to be restrictive, and we don't know how restrictive. So
Calls coming in on NVIDIA, BABA, Tesla, 715, 700C, $2.9 million. Jesus.
The late-breaking kind of decision to go to 75 basis points, do you worry
see
that
this
will make
Tesla.
policy guidance a less effective
Tesla,
tool in the future?
tagged
And should we
710 or
think of
close
that
to
as
it,
a
right?
kind of symmetrical
Tagged
reaction
right up
function
here.
if we start to
705,
get soft readings on
57.
inflation,
Starting
or
to come
if,
back. There might be a
labor
short
market starts
trade
to
here.
roll over?
Might be a short trade
To
coming
take
up.
your second question first,
That's a
yes.
major resistance for
I
Tesla.
think we're resolved to take this on, but we're going to be flexible in the implementation of it. Sorry, and your question was guidance. So again, the overall exercise is that we try to provide as much clarity about our policy intentions as we can, because we think that makes monetary policy work better.
A little bit of laddering down below to
because you have to live with that
375.85. We'll see if this support holds.
You do it, and it helps a lot.
Keep your eyes on the right-hand side here. Real support is still lower.
Of how well it can
Real
work.
support is still.
You know,
let's give you guys an idea.
Really just
real
done
support
very
is
little in the way of raising.
real support still at 370. So if at any point down here we lose, if we lose this market, this intraday trading, real support's at 370 right now.
I think that's been a very healthy thing to be happening. So, and I would hope that it's always going to be any guidance that we give is always going to be subject to things working out about as we expect. And in this particular situation, you know, we're looking for something specific, and that is progress on inflation. We want to see progress. We want to see inflation can't go down until it flattens out.
Over a little bit.
And that's what we're looking to see. And if we don't see that, then that's the kind of thing that will cause, even if we don't see progress for a longer period, that could cause us to react. But we will soon enough. We will be seeing some progress at some point.
377.02. Yeah, right down here. This is S2 down here.
I would like to think though that our guidance is still credible, but it's always going to be conditional on what happens.
I think if we don't see progress on inflation, that could cause us to react.
Some data.
Thinks the Fed's guidance is still credible.
Blackout, pretty close, very close to our meeting. Very unusual to one that would actually change the outcome. So.
Powell noting on the rapid change in policy for this meeting, saying that it's unusual to get data late during the blackout period.
I don't think it's something that'll come up a great deal.
Thank you so much for taking our questions. Colby Smith with the Financial Times. On the clear and convincing threshold for the inflation trajectory, what is the level of realized inflation that meets that criteria? And how is the committee thinking about the potential trade-off of much higher unemployment than even what's forecasted in the SEP if inflation is not moderating, at this acceptable pace?
So the second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Right. So what we want to see is a series of declining.
So heads up to some firm rejection coming up here at 380.
And
be
we
careful.
Like to see inflation.
Looks like sellers are coming down right now.
So
could either get a squeeze here or a firm rejection.
Right now, our policy rate is well
at
below
380.
Neutral. Right. So
looks like these sellers are moving down here.
Soon enough, we'll have our policy rate. Let's assume
watch my cursor. Going to look to reject this and send it lower.
Will be up where we think it should be, and then the question would be, do you slow down? Does it make you, that you'll be making?
Either going to get a nice rejection down, or it's going to squeeze, or we're going to get a squeeze.
I'm saying is what we want to see is a series of declining monthly inflation readings.
Again, we're looking. Ultimately, we're not going to declare victory
they're
until
look to
we
reject
see
this.
A series of these. Really see convincing evidence, compelling evidence that inflation is coming down.
Still have buyers buying 380. They haven't let off it.
That's what it would take for us to say, okay, we think this job is done.
Watch my cursor over there. As you can see these sellers coming down. Watch my cursor. They're looking to reject this 380,
and then turn right
send this lower, give back this whole trade right here.
Careful about declaring victory. But again, the implementation of our policy is going to be flexible and sensitive to incoming data.
Are you more concerned now that to bring down inflation, it's going to require more than just some pain at this point?
So again, I think that
I'll say we will not declare victory until we see compelling data that inflation is coming down.
And this is what's reflected in the SEP. But our objective
the brief dip in inflation last summer.
Bring inflation down to 2% while the labor market remains strong.
See it right here?
I think that
there's more supply coming in at this 380.
Is that
now, when you see this supply coming down like this, it's going to be looking lower.
Are going to play a very significant role in deciding whether that's possible.
Looking for a couple rejections up here, this 380 point.
Commodity prices, the war in Ukraine, supply chain, things like that, where we really can't. The monetary policy stance doesn't.
They're looking for something like
those
this.
things. So, but having said that, there is
at least to here.
There's a
if
path.
Not,
there's a path for us to get
to there. Maybe then for the move into the close or tomorrow.
Because of these external forces, and that path is.
Be careful of something like this taking place here. This rejection,
and you have
and then
a lot
move
of surplus
forward.
demand.
Should I leave this up so you guys can see how this happens?
In the labor market.
Show you guys how this happens.
You have two job vacancies essentially for every person actively seeking a job, and that has led to a real imbalance in wage negotiating. You could get to a place where
see the sellers coming in right now
was at a more normal level, and you would expect to see those wage pressures.
See down below here, this 374.95.
People are still getting
it's right in
healthy
here.
Wage increases, real wage increases,
this might be higher.
At a level that's consistent with 2% inflation.
Something more like this.
So that's a possibility, and you could say the same thing about some of the product markets where there's just excess capacity. And where the strong demand has gone into where their capacity constrained, right? So you have effectively what we think of as a vertical supply curve or close to it. So demand comes in and it's very strong, and it shows up in higher prices, not higher
it's
quantities.
crazy
not more
watching him.
costs,
I
because
don't
they
know if I
can't
can
make the costs
bear.
because they don't have the semiconductors.
He's not so bad
in
with
principle, that could work in reverse. When demand comes down, you could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks.
He's under a
would
tight.
suggest, because
He's
of
under a tight.
unusual situation we're in on the
He's
supply
under a
side.
tight.
So there's a pathway there. It is not going to be easy.
They gave him the fucking.
And you know,
remember when Trump used to fucking try to go off script and shit?
But
they gave him the script and
as
they
I
were like,
mentioned, it's gonna
"Don't
depend
fucking
to some extent
deviate
on
from the
factors we
fucking
don't
script." You fucking send the market. That should be noted
Hi,
too,
Chair
that they
Powell.
gave
Thank
him
you
the
for
script
taking our
today.
questions. Rachel Siegel from
Because in
Washington
reality,
Post. So
we
the new
are close
projections show the
to
unemployment
a
rate
market
ticking
break.
up through 2024.
Down to 320. That would break the market. It would more than break the market. You would bankrupt some banks, guaranteed.
What is lost?
So they have to stay on script right now. They don't want. But I'm sorry, any guys out there that think that they want 320
you're right.
today,
In the
they don't.
SEP, we have
So you can
going
see
up
it
to
in him
4.
having the
median
script out today.
Is 4.1%.
That he has to be very careful
of actual
in his wording.
And I would characterize that if you were to get inflation down to.
So I'm going to leave this up here and
it's way
see if
down
we
to
track
2%,
some kind of
and
similar thing like
the
this. See if I'm
unemployment
right on this one.
rate went up to
You're going to see some
4.1%.
rejection.
That's still
You can see the sellers
historically
building
low
now. This
level.
big red.
You know, we hadn't seen rates.
This big red. So we'll see if we get. We'll see if we get a double rejection or whatever up top here. We're gonna get the one. We went above, right? Maybe you might even actually get 2 rejections here.
So the idea
this
that,
looks like a rejection right here. Maybe you get 1, 2, then we head lower.
Last century. So
maybe I should have added another rejection here.
With inflation well
we'll
on its
see if
way
this
to
gets
2%,
rejected
I
or
think
not.
that would be. I think that would be a successful outcome.
I should have put like a double top on it.
We're not looking to have a higher unemployment rate, but I would say that I would
that right
certainly
there
look at
for
that
you to
as a
see.
successful
See if these
outcome.
sellers are still strong or not. To try to unfuck themselves, the longs.
We don't seek to put people out of work. Of course, we never think too many people are working and fewer people need to have jobs.
See if they're able to break through 380. If we break through 380, that's a very positive for the bulls.
The kind of labor market we want without price stability.
We want to see that break above 380.
We have to go back and establish price stability so we can have that kind of labor market. And that's a labor
want to
market
see the bulls
where,
be able to get above it. Let me see if I can make this line smaller so that it's not so fat so you can see what's going on behind it.
Workers at the lower end of the spectrum are getting the biggest wage increases as they were before the pandemic, where participation is high, where there's lots of job opportunities, where it's just a really, I mean, the labor market we had before the pandemic that's what we want to get back to.
If we follow this, I'll laugh my fucking ass off.
Disparities between various groups at historic lows. We'd love to get back to that place.
Sellers weak again above.
There,
this is good for bulls. We'll see if bulls can take
the
this.
levels of inflation we have. So we have to restore.
Stepping back again to that 382 above.
It really is in service.
Look above and see if there's any kind of magnet. See these sellers up here just waiting. This is all supply right here. I want you guys to be aware of this up here at this 382. Okay. I want you guys to see this. There's a lot of supply up there.
Hi, Chair Powell. Matthew Bosa.
385 is top.
So, as you just mentioned, the committee is now
think you're getting 390 today.
Point rise in
so you could call, if you're really super bullish here, you call like 385 top for today.
Policy statement about
lots of supply though at 380 to 382. You can see it. When I bring this down right here, you see this mass right here? This is all supply to sell this down. Just be careful, don't get caught in here. And we're going to look below for where real support is. Looks like there's some support here at 377.27. That's right here.
I'm not trying to induce a recession now.
And then
let's be clear about
real
that.
support has come up a little. It was 371, and the real support's at 370. So you might catch about 371.
So let me talk about that
50.
Clearly, it's our goal to bring about.
We could throw that one in there, I guess.
While keeping the labor market strong, right?
Let's make it a minor.
That's kind of what the SEP says. That the
demand
SEP
zone.
has inflation getting down to a little above 2% in 2024 with unemployment at 4.1%. So
is this helping any of you guys out there?
Powell responding to questions saying we're not trying to induce a recession.
Out there how to trade a market, even if it's for only a few points. I don't care if you're trading futures, Globex.
The war in Ukraine.
If you just grab and calls for 5
clearly
minutes,
it's our goal
for 10
to get
minutes,
to 2% inflation while keeping the labor market strong.
Is this helping you guys?
Broadly, which have been larger and longer lasting than anticipated.
It's in the pathways to that, to those goals have become much more challenging.
They know what the fuck they're doing on Twitter. They can blow me.
2% inflation with a strong labor market. And so much of it is really not.
Please like and subscribe. I forgot that. Please like and subscribe these videos.
It kind of says on its face that
we'll talk about. I'll be on tomorrow. I promise I'll be on tomorrow. I promise.
That just didn't seem appropriate, so we took the sentence.
I can't guarantee times. How about that? I'll try to be on before the open.
Could you talk a little bit about
please like and subscribe these videos. Please follow me on Twitter. It's CaptainJimJames. I have a free sub. You can always follow me at CaptainsAlpha. I have a donation jar down on the bottom to help keep these streams going. Costs me a lot of money to run these streams for you guys. Costs me 13 to 15 grand a year to just trade in just services. Just like Flow Algo, Trade the News. I'm trying to get a second stream to put Trade the News and Flow Algo live for you guys on. If you guys can help support the channel, I'd appreciate it. There's a donation button down below in the description. I also have a donation button on @CaptainsAlpha for people that don't like PayPal. I think it's got a or on your phone or something. I forget what the other one is. It's not PayPal. It's
that's not something
I fucking know.
My
wife deals with that shit. I don't even know anything about that shit. Helps pay for the kids too. I got kids that help me for this kind of shit, put these things together. You heard my wife and my daughter earlier in the stream, so I always appreciate the support of the channel. We'll move on from that. You know what I've put in the I've been thinking about making it a paid service because I'm kind of getting forced into it. But fuck them, I'll never do it.
While acknowledging that headline inflation is important for expectations, even if gas prices and other things related to the commodities are not something that the Fed can do anything about.
So it's become.
See right here, I wanted to do that double top in here, and I didn't write that in. I should have.
And hence the need for the.
I thought about putting shit behind a paywall because I have to. I'm forced into it to an extent. Not a discussion for right now, but I'm never fucking doing that shit ever. You'll never fucking see anything behind a paywall. We got a Discord, by the way. You can always join that. It's always open. You just request access. We've got a @CaptainsAlpha handle on Twitter for detailed information on the stock market behind the scenes.
Sales surprised the market by falling, and then revisions to the previous months were down.
So if you're just joining us for the first time, please join us. If you're a poor trader, poor investor, if you're
saying that inflation expectations are at risk due to high headline inflation.
Looking at the retail sale, the big
always
store
helpful
numbers and all that kind of thing. And so, but I think the fair summary of what we see.
Yes, I will accept requests today, I promise. I will go on to Twitter and accept any requests at CaptainsAlpha.
Spending is very strong. The consumers.
So what do we got? 377 down here is firming up. This is nice to see.
There's no
I like seeing this down below. This is definitely firming up down here. I like seeing that.
Consumer confidence is
so 377.
Probably related to gas
I might take a call here.
Powell, when asked about the consumer, saying that they are seeing some shifts in consumption, but overall the spending is very strong. The consumer is in good shape. He's not at this point seeing any signs of a broader slowdown in the economy.
The economy slowing a bit, but still growth levels.
He's pumping the economy right now.
So then as you are raising rates in this economy, how closely are you watching consumer spending, or is there something
he's trying to push to you that you're going to have to live with inflation, you're going to have to live with rates, and the economy is going to remain strong. That is the message right now.
Investment, which actually has softened a bit. And we watch. We're responsible for watching.
All right, I'm in some calls again.
But consumption is 67%
fucking right at a double top. Jesus,
2/3 of the economy.
Shouldn't be doing this.
Naturally, we spend a lot.
Don't follow me on that trade.
There's a lot going on. There are a lot of.
I want to trade that to 382.
Ultimately,
I want that tag at 382. Give me that 382
tag. It does appear that the U.S. economy
one more time.
is in a strong position.
One more time. Give me 382.
Well positioned to deal with higher interest rates.
One more time, give it to me.
Thank you, Mr. Chairman. Michael McKee from Bloomberg Radio and Television.
There you go. Push it through there.
Are you targeting headline inflation now or core inflation? In other words, how far would you chase oil prices if they keep going up, if that's going to be the component that drives expectations? Would you risk recession
You're gonna roll me.
for a headline rate if the core rate is holding steady or starting to go down?
So
come on, give me 382.
For inflation in the law.
Give me the real double top.
Inflation means headline inflation. So that's our
squeeze it up there. Let's take a look at Tesla real quick.
Of course, like all
sweating right now.
Look very, very carefully at core
Tesla
inflation
wants that 710.
It's a much better predictor.
Tesla's like, fuck you, we're getting 710.
It's
we ain't closing below 700.
Inflation is going, and it's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope.
As is the case following a Fed rate move, the Saudi Central Bank matching that, raising their reverse repo rate by 50 basis points to 1.75%.
I mean, the energy prices are
and the repo rate 50 basis points to 2.25%.
Of food, not all of it, but most food prices are pretty heavily influenced by global commodity prices too, also other things. So we can't really have much of an effect, but we have to be mindful of the potential effect on inflation expectations from headlines. So it's a very difficult situation to be in.
So I'm sitting on 380Cs again. Once again, I'm sitting on 380Cs.
The difference between the
there's still a big bid in them. There's still 150. I think they're gonna burn them at some point, but there's still a big bid on 380C. So I'm gonna sit in these for a minute. I've got a stop loss on them.
Into the record, were they revised
we'll see what happens
after the CPI or Michigan numbers came out? In other words, does the SEP as we have it now reflect the same factors that led you to
still decent buying going on? I still believe in two things. I want you to realize this, be conscious of this if you're a bear. There should be put destruction. We do it all the fucking time. Since fucking January. Whether this happens, look at when you're a bull, right? I want you guys to hear something. I'm going to turn him off for a minute.
So I
want to talk to you guys about something that's important, okay? Because I haven't been here. That's great. I want to talk to you guys about something real quick here. So this doesn't really matter if we're going to look at a larger chart, okay? This doesn't really matter if we're in a bull or a bear market. We're going to go back to a bull market. Okay, we're going to look back in a bull market here. It's a bull market right here, right? We go up. I want you to realize that even when we're going up, that we come down, right? See that? Right? See what I'm saying here? So even if we're in a bear market, you're going to see that same thing as we go down. Now we may get that one break, right? And we should at some point get that one break in this bear market. You get those in bull markets as well. But generally speaking, they're going to clear out puts. That's when I say that. We're clearing out the hedging, right? So you'll still see now this next one should be muted. Shouldn't be a big one like up here. So my point to you is that you've got a massive hedge rolling off on the 17th. Keep your eyes on that. They're gonna look to buy cheap puts. Okay? So you see people in bull markets lose money. I shit you not, you do. I can fucking tell you every fucking month I'd have bulls telling me to fucking buy fucking calls up here. I'd have fucking bulls saying, screaming at me, buy calls right there. Right? They'd be like, oh yeah, buy some fucking calls right there, Cap. You know, they'd be like, oh, buy some calls, Cap, right there. Buy some calls, Cap, right there. I shit you not. So you gotta, as a bear, you have to, just like a good bull, I want you guys to know that there's gonna be, even in a bear market, as we go down, right? Same kind of a thing, right? You got to close them out, reset, close them out, reset, right? Same thing over here, right? You're going to be looking for the next reset, right?
Also, there's always a risk of going too far in rates or not far enough.
Now, do I think we get up here to 400, 420? Fuck
and the Fed is quite mindful of these dangers.
I doubt it. Maybe you get to 400.
And the worst mistake the Fed could make would be to fail on inflation.
See this 385-ish? Is that what that is? Let me find out what level that is. See this little big thingy right in here? Somewhere in here. Get rid of this. 390 max. 390 max, I think, this time. So just be conscious of that as the week rolls on, as we get into Friday and into next week, into July. There could be some we are rejecting here. There could be some there could be like a sideways to up trade. You've got vol compression. I'll go on a smaller time frame here and look at it with you. It's funny, is my last video I did this with you guys. My last video I showed you these targets, and we actually traded that. We actually did in my last video plug these in for you. See this this white line down, these tags. So my point to you is that you could see a sideways trade with low volatility heading into the 17th, right? You could see like a push up into the 17th, sideways trade into the 30th, and then we start legging back down. It could come over here, but just note that more than likely, you're getting at least something like this before we start heading down, okay? Something like this. I want you to realize that as a bear, okay? Now, if you're a bear and you've been short since January 1st, fuck it. You just stay in and you'll wait until your next leg down over here. Surely, though, at some point up here, there's going to be another rollover. And you'll probably find me going, fuck it, I'm buying calls here. But, but that's the point. Same as before. We talked about it before. To expect 420, 430, at the max 430, and another roll. We got it. And we're more than likely going to get it again over here at some point. So if you're a bear and you're just like, I want to buy fucking 0 dates down to the depths of hell tomorrow, maybe. It's possible. It's possible we could trade down into OPEX down here. It's possible. Probably 30% chance. And we bounce again? Sure. I'll live with that. I can go with that. Maybe we got a new channel forming up here, and this is our new channel? Sure. All right. We can day trade that, no problem. But generally speaking, over the course of from now until middle of July, sometime, I'm going to expect some kind of clearing of hedging, and then we trade it into So that should, if you're a bear, that should give you some maybe just don't look at the market for the next week or two. If you're a bull for a longer time frame, I would expect a sideways trade to develop over the next 5 to 8 trading sessions. If you're wanting to trade those, they would be, the same thing as we did over here. It's going to be something similar to this. A smaller leg up. I wouldn't expect this big blast off. This big Vanna trade would be lower. And then something like this, and then we head lower. Just something similar. If we don't get the Vanna trade, and we don't get the sideways and down trade, that is the time to throw on some real heavy puts. If you're a big bear out there and you think we're getting that market break like right now, I disagree with this context, but I promise you, so we're right here. This is exactly where we are. So if we do not get a Vanna trade up into the 617 OPEX, right? If that fails, and we just start doing this kind of nonsense after 617, fucking this market will crash to the depths of hell. You will see 320 by July 1st. So if you want that tail risk trade, you wouldn't see the Vanna trade coming into the 17th, 18th, 20th, 21st. But if you do see this trade up, this will be the expected trade into July, and then we'll make some pretty big fucking nasty moves down. I don't know if this helps you guys out there. This is a pretty common setup right here. A pretty fair. We traded this all up. We knew this was happening.
All saying that he thinks what's in the SCP would meet the test of the soft-ish landing.
So in a larger time frame, if you're thinking about a larger time frame, if you're a bear, my point to you would be day trade it back and forth. Do not get, unless if you're like, I want to buy fucking puts the depths of hell, I would then say put on some ratio spreads or something that's going to at least pay you if it doesn't go to the depths of hell. Or I would say day trade it and wait for a rejection at 390, possibly 4. At 390, I would start with put spreads and then get more aggressive as you get closer to 400 if we go there. With puts, maybe make them weeklies or even 0-date puts at that point. If the market starts to roll over, then you get aggressive with 0-date puts or 5-date puts or weeklies or whatever.
Just acknowledging that a soft landing now could rely on a much bigger chance now will depend on factors outside of their control.
So it's 3:18 in the afternoon. I'm going to sign off at 3:30 with you. I'm going to take some of this stuff away real quick, and I'm going to show you guys. I'm going to give you guys what I think is going to happen into tomorrow, and at least into tomorrow. So we're going to take a quick look here real quick, okay? I'm going to give you a trading range for tomorrow. And give you what I expect. So today we've got one more day over here, right? We've got OPEX over here on the 17th. Oh, right? It's Friday. OPEX trade. If I had to guess between today and tomorrow.
Quarterly, the FAA is proposing requiring more efficient jets and turboprops to lower climate impacts.
You're going to see your trading range. Tomorrow, your first support's going to be 370. And your resistance tomorrow. So you guys will get, everybody waits till afterwards to give you this shit. I'll give it to you now, okay? Everybody's like, oh, we can't do anything until after.
I'll say Fed funds rate will be somewhere in the 2s by the end of the summer, and that's still a low
exactly
rate.
What it is tomorrow. So your R2 tomorrow, 385. Here's your S2 down below. This is your sell the world down at 363. This is firm support down below here. This is 363-ish. Call it 362. This is the lowest that I would expect tomorrow, 370. My price target into tomorrow is going to be 385. That's my price target. I'm going to expect that any of these puts hedging that's on the market, you're going to see the dealers de-risk themselves from this event. You'll get a boost into the overnight. So if you follow my cursor, I'm going to expect something like this. Trade up, and then possibly a trade down, for looking for support at R1 tomorrow at 380 for a trade higher into your Vanna trade into OPEX. And trade higher at some kind of failure above. We could possibly trade as low as 370 tomorrow. Saying 380. I'm looking for this to hold. If it doesn't, we trade down to 370 or even 360 into the bell. I'll then I'll told you that I would buy that OPEX long. So tomorrow, into the close, where we are right now, I'm going to give it to the bulls heading into the close. I'm going to probably buy some more zero dates here into this close, and then what? And then sell them at the open tomorrow, more than likely. 390 for me is top. This is all free. So all this up here, 390 to 400 is what I'm going to be looking for whenever that Vanna runs out. Somewhere in here, above here, you're going to see the Vanna run out. You'll see vol compression, trading sideways, and then down into mid-July over here. Okay, so that gives you guys a better idea. So you guys get this before you even get it from whatever fucking service you're paying for out there. That's what you need to know for today. You can always go back to this video at the end of the day and plot yourself out what's going to happen the next couple days. So that's what I foresee happening in the next couple days. So yeah, we are trading up higher now. My calls are doing much better. They're at $1.80. Fuck yeah, baby. Fuck yeah, give me those calls into the close. So I've got some 380s on right now. I'm going to be buying some more calls into the close here. My price target above is 385. I'm not seeing any hedging coming in right now. Nothing saying, yeah, we're selling the fucking market today. I don't think that they do. I think that they trade this up and higher. I think that they're going to try to do some put destruction, clear the boards of expensive puts, and then we'll look for a move sideways and down into the middle of July. I hope this helps you guys. This is pretty much giving you what my forecast is for the rest of the week. It gives you even a rough forecast into July and the middle of July. I think that's the most probable trade that we have coming up into end of June, July. I will be live with you tomorrow morning. I wanted to say thank you. You guys having fun with me today?
White House's Kirby acknowledging oil production will be on the agenda when Biden travels to Saudi Arabia.
Yeah, Chase knows better. If Chase knows that if you bought puts right here, like just fucking puts, this is not the place. Promise you, this is not the place. Like, if you wanted to buy like month out puts right here, probably not the place to be buying them. Chase, I'm going to give Chase something. He's a very good long-term trader. If you guys want to follow someone that knows about long-term trading, he knows about buying puts months out, 6 months out, 3 months out, that kind of stuff. And he knows when you go in, when you go out. I've known him for at least 6 months now, and him and I have had this discussion, an ongoing discussion over the past 6 months about this, right? How do you scale into them? When do you take them? How long do you hold them for? Don't look at the fucking market until it rolls.
Powell saying that on QT has no reason to think that it will lead to liquidity issues for the market.
You're going to be looking for a gap failure above. I love you, Chase. I like the fact that we've known each other for a long period of time now. Some of you guys have been following me since the fucking beginning. Some of you guys know exactly what's up. So I'm going to leave you with that today, okay? As you're going to expect dealers to buy back their hedges, or they have to buy back or de-risk their hedging, right? You're going to look for banks.
And bond prices are firming up here as we approach the final 30 minutes of cash equity trade. The Treasury's 10-year yield down to 3.33, down 14 basis points on the day.
There should be at some point a
stock futures moving back towards the highs of the afternoon. Up 75 handles or 2% in the S&P minis and about 465 points in the Dow.
Give me some money. Give me some fucking money here. Print the fucking calls for me. Make me some fucking money. 380s are now up to $2.30 once again. Just printing them. Just printing them. So that's my take on into the close. My take on into tomorrow. We could see a pullback tomorrow. I'm not against the pullback on tomorrow. There's not much going on, or at least some compression, maybe a sideways trade, another leg up, unless those puts start losing value on Friday. That could give us an early Vanna trade. Sometimes we get the Vanna trade early. If traders know that there's a Vanna trade coming on a Friday and that the FOMC wasn't too bad, they might front run it. That happens sometimes. Sometimes it doesn't happen because the puts are held until the bitter fucking end. We also, again, we have fucking quad witching, right? And these guys want a certain price to close out their trades. They want a certain price to go long on their quad witching or short on their quad witching. So just keep those in mind on Friday and into Tuesday and into next week. I appreciate you all.
Saying we're carefully watching to see how much rate rises will affect residential investment and house prices.
I'll see you all tomorrow. I'll be on in the morning for you. I am long here into the close. I'm going to probably look for another buy-in once again at the bell. Hopefully we can get a little bit of a sell-off here into the bell. I'm hoping for that in the last. If we can get a sell-off, matter of fact, I'm going to take some profit here. Just in a second here. I'm going to take some profit right up here at 382. See right here? So I'm going to take some money. I'm going to give you guys a lesson here. See this right here? 382.61. Take some money off the board up here. And then I'm going to jump back in at the bell. Okay, so what I'm going to be looking for is some kind of a double top up here, and I'm going to hopefully we sell it down into this bell. We're going to lose some of that event vol, and then I'm going to grab some more calls for tomorrow. So just give it a second here. We'll see what happens. See if these sellers step back in again. Right now, buyers are in charge. They're in charge to 382.45.
Powell has concluded the press conference.
Powell's presser's over. Sweating bullets here. All sweaty. Have a lot of UVXY puts coming in. You want a safer trade. You don't want to care about where the SPY goes. The easier trade is UVXY or VIX. VXX, not VIX. So UVXY, 617, 14.5 P. VXX, 617, 23.5 P, $57,000. UVXY again, June 17th, 14 P, $90,000. This might go straight up into the fucking bell. This might go ballistic right into the goddamn bell. Got some new, oh, here we go. Take a peek up higher at that 385. $380s are now 263. I'm going to take some profit here. Sweating balls there. Now up to 268, 270. I just got a few runners on. See if this catches a rejection here. If you're low on an exact price above 382.64. Same place as before. Usually comes in a little bit lower. You want to see a break above here. I want to see a push above this if that can happen. See if we can get out of there. Actually, we could go much higher. 384. We could probably get up here. We might get to 385. All right, we're gonna look for 385 now. Fuck yeah, baby. Hold on. There you go. Price target for the day, 385.
Some comments from White House spokesperson Kirby. He says that he is still optimistic that issues will be worked out and that Finland and Sweden can still join NATO. Issues with Turkey, according to the White House.
Nice push, nice support. Going to raise up support here to 377. Let's see if we can get this 385 into the bell. Get that Vanna going, baby. As a place of sellers, be conscious. If you only bought right here, you might get trapped. You might want to sell for profit and wait for another buy-in down below.
For NG, ticker ENGI, trading in Paris, the company says that they are noticing a reduction in gas deliveries after the latest actions from Russia, and they say they are closely monitoring the situation, which, as things stand, have no impact on the supply for their clients. That's Echo November Gulf India trading in France.
385s were down at like 11 cents. They're now down up to 35 cents. I should have bought those fucking things when they were 11 cents. Would have made bank. I'll stay with you till 4 p.m. And you guys are still in here, I'll stay with you. Yeah, premium is juicy.
Brazilian press reporting that Petrobras intends to increase fuel prices soon. Papa Bravo Romeo.
Right about there. Trying to match them up here.
This echoes a report we saw in Brazilian press just yesterday that they plan on raising the gasoline and diesel prices by up to 7%.
I don't know if that works for you. See, real sellers are above here at 385. We're going to get up there. We're going to get up to 385, guaranteed. Not guaranteed, but pretty good goddamn chance we're getting up there. Come on, baby, get up 385. Give me that 385, baby. Give me that squeeze into the bell. Squeeze it up to 385. Give me that motherfucking money. Is everybody making money today? Make some money in the stock market. Live. Give me that money. Some sellers coming down to 384. Be conscious. They might have some, watch my cursor. They might be up here, Sneaky Pete. Won't let you get to 385. Watching my cursor over here. Just be conscious of this. 380, 378. Be careful up here as we head trade higher. I'm gonna hold on a second here. I gotta raise my stops here. I'm getting fucking. I gotta limit that shit. Some Sneaky Pete's hiding up in here. I'm gonna widen this so you can see it. We don't have to actually pause it. Right here, we're burning through sellers right here. Next group of sellers, 384.27. 384.27. 385. Come on, baby, get up there. Burn those sellers. Get that Vanna in early. Get that fucking event Vanna in. Give me 385. Come on, baby, print them. Print. I'm at 100% right now. I gotta change my stops again. $25. I got some stops at 325. 390s. Right, not 390s. I'm saying 390s. Just murdering. Talking about 385s. I was saying 390s, or I meant 385s. Don't fucking stop me out. Push. Fucking push. Push it up there. Give me 385. Sorry, I'm sweating here. Give me 385. 385. All right, I'll move my stops again. Stops are now at 350. I'm going to trigger my stops right now. Went from 325. Yep, they're gone. They were at 325, then 350. They triggered at 350. Okay. Look to buy in again down here. See if we can get a buy down here. We got 381, 380. Move this down to 381. That's that top at 382, right? Where's that? 382.26. Yeah, that's right there. It's actually lower. It's right here. And then 381.03. $381.03. 381.03. Where's that? I fucking trash that shit. 381.03. $382.22. Right there. 382.22. Right in here. Spread's really high right now on those 380s again. I want those spreads to come down a little bit. Just bring those spreads down a little bit. There you go. Come on down. Let's look once more. 381.43, somewhere in here. High, low. A new bid coming in right now, too. You guys are all still with me, aren't you? You guys are fucking monsters out there. You guys are savages. Yeah, we're now down to 260. Dude, the bid ask right now is 257, 285. You fucking sickos. You guys are savages. Okay, watch my cursor down here. We're looking for a buy down here in these yellow bars, these two. 382, 381, 8, or 13 or whatever, right down in here. Looking for buy. You guys are killing me. Those fucking calls are now down to $2.30 fucking cents. Fucking crazy town. Fucking destroyed. So I'm looking to buy right here, okay? So I'm going to add some right down here, 381.15. Might even buy some right here. It's at the $2.37. The ask is $2.48. They're fucking smoking crack. Okay, so just a big heads up here, okay? A little bit of a warning here. We might see some subdued overnight action here. It's 3:38 in the afternoon. Someone just threw down SPY, June 15th, 364p, $6.5 million. This is a warning to you guys out here, okay? IWM, July 15th, 166p, $1.1 million. SPY, 7/15, 364p, $6.5 million. Qs, 6/22, 284p, $700,000. So I want you guys to realize that right here, you're starting to see already the signs of a subdued recovery, Vanna rally into the end of the month, and some larger players saying we're already starting to leg into some hedging. Not huge, but you're already seeing like, yeah, we're going to start legging into July right now. We're at 383. And I told you 390 is probably top. If we trade this into, that's what you're seeing this weakness right now from. So if you see us trade, so 390 is probably fucking top. This matches up to the theory that 385, 390 is probably top overall. Watching this happen right now. So I haven't bought calls again. I'm just waiting here. Waiting for that impact of these SPY puts to be felt. I might get down here again. Might get down to this 370. Might get some cheap fucking calls for tomorrow. There we are right there. We're selling it down. Got this little bit of VWAP down here at 378, right where we are down here. And we're seeing the impact. Some dip buyers already showing up. It's a little too early to be a dip buyer here for me. I'd really like to see us, watch this right, I'd really like to see us tag down below this VWAP at least. You can see that's where supply is. You can see it on the right-hand side. So I'm going to wait for this 378. See if we can grab this for the bell. And even if we trade up here, you might see like a trade higher into the bell, and then the interest in calls wean. Repricing of calls for tomorrow. So I'm going to give this a minute here. See what happens. Thanks for letting me know on the whale rolling from 750. Yeah, I saw the whale rolling out to 715. I saw that, Marcus. Thanks for giving us the heads up. As long as you guys are making money, you have to make all the money in the world. You guys have to make some money. You have to make all the fucking money in the world every day. You guys are doing just fine. As long as you're green on the day, you're good to go. Just have to be fucking green. It's important to be green. It's nice. It feels nice to be green on the day. So I'm waiting here. I'm not buying anything. You can see the repricing of 380s are now down to $1.27, $1.33. The reason there's some, I want you guys to understand that too. So the event interest is going down as well. So if you're going to buy some spreads, right? You're going to look for this to wean off, buy some spreads.
A little more than 15 minutes to the close. Now we've seen stock markets come off new session highs here in the final hour of trade, holding on to gains of about 65 handles in the S&P futures market. Crude futures remain lower by about 2.5%, and the U.S. 10-year yield at 3.343% is down about 13 basis points on the day.
So an example would be if you see, let's say we hit 383.90 tomorrow. Let's say we see that, right? If we see 383.90 tomorrow, you wouldn't see the price of those options for Friday be $4, right? You're not going to see it. Does that make sense? They're expiring on Friday. You might just not going to see it. So you're going to see the repricing of options as we head into this close. It's probably a good idea to be buying, or if you're a bull or bullish on the rest of the week, if you wanted to buy some spreads, possibly in this close or even tomorrow, we might get a nice low to buy something for that Vanna trade heading into the 17th. You might get a nice trade either here or tomorrow that you can add, or even add to a position at some point today. So I'm going to wait here into this close here. And between 4 and 4:15, probably throw some calls on for the overnight. We'll take one more look at this. We'll take one more look at this chart for tomorrow. I want to see what the previous low was. Did we tag that today? Yeah, so that's that S1 right there. That's that S1, right? That recheck of S1. Didn't get that today. Didn't get the recheck to S1 today. See that 370.59? We might get that S1 check tomorrow. We might get something like this, right? And that's kind of scary holding 0 dates. We might get that tomorrow, and then a trade higher. I would like to see that get retested once more. So anyways, risky buying calls into this close. Even 0 dates or 1 dates, 2 dates, I guess they are now. There might be some risk. I might not buy. You know what? You know what I'm going to do? God, see how my mind changes as the day moves on? I might wait till open tomorrow. I'm not going to give all this back. So here's my plan for tomorrow. Plan for tomorrow is I'm not going to buy this fucking close if we were to give it all back. If we come down here to 372 on this bell, I'll buy that fucking close. So I'm going to keep my eyes open the next 15 minutes. If we had some craziness like that happen into the 4:15 hour, I'd buy that close. If we don't, it might go up something like this, and then we'll check that 370 and go higher. Yeah, I might buy that close. If we can get that close lower, I'll buy this, and then hopefully I can sell them, I think, or maybe they'll be dated for Friday, so I could get out of them tomorrow if they're wrong. Anyway, we'll keep an eye on this right here, see if we get the bounce off 377, or if we fail and recheck this 370. I'm not opposed to rechecking this 370. I would like to see it, actually. It'd make me more confident in a trade into Friday and into Monday. It's back here. I don't think we get it, though. I think we check this fucking low down here, this 372. As a matter of fact, I'm going to raise this motherfucker up right here. 372 is where the check I want to see. I said 370. I want to see that check. That's the check I want to see for tomorrow. We're going to move this up. That's the check I want to see. I want to see this check one more time. I want all that given back. This event given back. We'll see how this day ends. It's going to be important to see how this day ends right here. There's that 372 down below. Keep our eyes on it over here. It's still down here. See it down here. Let's look at it on the Bookmap and see what it's saying. Yeah, it's down there. It's right there. It's right fucking there. See that supply down there? God damn robots. Again, a nice little bounce already down here at 378, 379-ish. $378.07. Where's that? VWAP's at 378.20. I really would like to see that fucking 372 close. I'm a fucking bull. I'm like, give me fucking, let's check 372 right in the fucking bell. We buy some fucking calls for Friday at 372. That's how fucked up my mind works. This is an interesting place to buy calls and 0 dates on somewhere in here. Wouldn't shock me to see it like something fucking stupid. Like kind of nonsense like this. Then it bleeds off until 4:15. Then you get your check down here at the open tomorrow and you're fucked. Isn't that how it always goes? And the event interest is gone too, and the repricing is gone. That's horrible. I'm watching to see what I'm seeing here. Not seeing much on the on the flow algo right now.
Pfizer PFE winning FDA approval for their COVID-19 vaccine for infants and toddlers.
Keep your
Papa
eyes
Franklin
on oil.
Echo.
Gas just got a nice bid. UNG.
The Pfizer
Natural
vaccine
gas.
got a backing from all 21 of the Fed panelists in a vote today.
Yeah, XLE's not looking too sexy. XLE's looking pretty hurt.
White House Press Secretary Jean-Pierre saying that Biden administration is open to the Defense Production Act on oil capacity.
Yeah, look, I want you guys to give you guys a heads up here. Natural gas is looking bullish. Oil is looking not bullish. Not right now, it's not. They can't do too much about natural gas right now without some news from Ukraine. They're shipping that shit in containers across the ocean right now. Natural gas is looking still bullish. Fucking oil is not. And that news just dropping right now. Price target down below on oil, or at least XLE, is 80. A retest of 80. It's right at its retest. Its first test was right here. We're some pretty large support on oil right here. It's pretty big. Yeah. So what do you need? You need a rejection at $86. Next short would probably be 86 or 85 on XLE. But it's still overall looking bearish. Maybe oil trades up to 86 with a rejection at 85 or something. Probably fails at 85. Next leg down for oil on to $75. Natural gas looking beautiful. Starting to break through right now on the SPY. Let's check out some others over here. Starting to squeeze down below here, right? You guys see it over here? Starting to test these lower levels down below here. Imagine if you're in calls right now and you're losing your shirts right now. At home, pissing, cursing, screaming, crying. It's a little bit lower level down here, 377.33. All right, down below VWAP. See this VWAP? Sometimes you'll trade below, just slightly below VWAP, then it gets picked back up. So you might get that dip below VWAP down here. And you can see we're laddering in slightly below.
Here, market on close now, more than $2.5 billion to the sell side for S&P names. Stock futures continue to drift away from the afternoon highs, 37.91 last.
We'll see if we can get this really nice deep sell off into the close. Maybe we can actually buy this close. This might be a buyable close, believe it or not. Might be. Might be able to buy this fucking close. I'd be stoked if we did buy this close. Might be a good buy in this close. This leaves a lot of trading room for the rest of the week. This is good to see. A lot of room to trade here. If you're a Tesla bull right now, you might get another trade below here to at least 685, okay? 685 on Tesla is probably your next dip buy, or just below it, 683. Yeah, VIX bounced on $27. Yeah, I'm going to look for weakness. So I'm going to tell you guys, look for weakness into tomorrow to 370. 372 to 370. If you're a bull, 370, 372 is your next dip buy. So I'm not even going to pay attention to this. I'm not going to buy this close. I don't think I am. Too risky. So 370, 370. If you're a bull, look to grab 370, 372. You can buy this. It's probably a trade here. But I'll be honest with you. I'll be honest with you right now. The trade is lower. The trade is down here. The trade is right here. I'll paint the box for you. That's the trade. into tomorrow if you're a bull. See that right there? On your own charts at home, put a little box down here. You can actually move this up to 373.45, all the way down to 370. Somewhere in here is your next trade. Okay, if you're a bull. If you missed the trade and we bounced here at 378, it's nothing lost. You didn't lose any money. More than likely, between now and tomorrow, you're going to see that. You'll see this at some point tomorrow. And when you see this, you want this to hold. If this holds, it's going to be a good trade higher. So good. So 263 of you stuck around to the end. Okay? So it's good that you've stuck around to the end of this broadcast. So right in here is what you're looking for a dip buy. That's what I'm looking for. And I'm watching the VIX right now. I want to see that VIX get up a little bit more. That VIX fucking bounced off 27.76. For me to buy a dip, I want to see it up at like fucking 30, 31. Like with fair confidence, somewhere up there at like 30, maybe lower. How about $30? If I can see the VIX at 30, I'd buy that. I'd fucking buy that. I'd buy calls. Just keep an eye on this as we head in the close. You might get that Vanna trade into tomorrow, or the de-risking, but I don't know if it holds into the open. My fear is that we get we have like a green futures and then we fucking sell before the open. If you're a Globex trader, there's probably a trade here into the overnight long, believe it or not. And I would cut that shit loose by between 4 a.m. and 6 a.m. I would cut it short by open. If you're a bull, it's a tough place to be buying right here without a Globex hedge. You could buy it here and then hedge Globex. That's the best way to trade. If you were to trade this, it would be long calls into the close, and then if it rolls in the middle of the night, you fucking short the fuck out of ES mini to recoup your losses. Yeah, let's look at the market breadth indicator. Yeah, market breadth should come back. You'll see breadth. You're going to see. So I want you to know you're going to see breadth into July. I promise you. You'll see some breadth into July. You'll see some breadth into July. We're not going down. Or we might. We might go down to 360 or 380. 360 is probably the put wall bottom right now. I haven't looked in a day or two. I'm assuming the put wall bottom is 360. And then 320 on the table. Dude, you guys, you really need a lot of shit to happen for this to happen. Like for 320. So you'll probably see the breadth come into play, a sideways trade from now into so let's say from now into July 15th. I would say from a trading range from now, an implied move from now to July 15th would be 360 to, let's say, 420 on the high end. Believe it or not. Do I think you get to 420? Probably fucking not. Do I think you get to 360? Probably not to the end of July. Do I think you get 320 in July? Very possible. So because we're in this downward trend. So I think your max is 400. Trade sideways. Trade it fucking sideways into July, and then we start rolling it down into 360 and then down into 320s if we start really fucking selling heavy. I just don't think you see. It's hard to see 50% drop-offs in like a week. Like, you guys have to understand how massive that is to see a 50% decline in fucking like 2 weeks. It's happened. But you need something really bad. Like, I don't want to repeat those bad kind of things, but you're probably not going to see it. You're probably not going to see that 320 more than likely until late July, August, maybe. You'll see declines of 11%, 17%, that stuff like that. You'll see trades higher, and they'll take this down as slowly as long as they possibly fucking can until it actually breaks. So I don't think it breaks until. I don't think it breaks. Let's look at a year chart. I think I showed this yesterday, right? So like, we don't even need to do anything. It's not like big rocket science or anything, but you guys can see this back here, right? So I want you to see that right in here, right below where you are. See this right here? See this area down in here? Some pretty big fucking support down here. This is right around 280, right, to 350. This is going to take a lot of work to get through. The key here, though, that I want to show you is, or the important thing to show you here is, let me see here. The key that I want to show you here is, especially if you're a bear, is you see this like 319, it's probably 320, but it's like 320 to this 290, let's say, right? See this 320 to 290? It's going to be a bitch. Like, getting through this is going to be a bitch. Like, this is a lot of support in the market. I warn you that. See this 350? This area right here? This whole area? This is all a lot of support. Now, if we grind through this over the course of 6 months, believe it or not, this could take 3 to 6 months. The fucking fall down here to 212 is nothing. Like, if you break this 290, we fucking free falling down here. There ain't nothing holding this up. This is all scam money in here. So think about that as you plot and plan your this next 6 months or to a year, is that this is going to take some time to work through. This whole area here is going to take some time to work through. Okay? It's all going to take some time. It's not, you're going to spend some time in here. I promise.
Tick flow data for April, 1.3 billion total net tick flow.
It's like the likelihood of that happening right now.
8.7 billion in the prior month. That long-term tick flow is 87.7 billion.
Coming to the close right now, it's 4 p.m. Take a look down here. I'm going to check. We've got some end-of-day calls that came in. They're trying to ride the Vanatrade into tomorrow. See that little bit of a VIX spike after the bell. I'm flat right now. I'm not in anything. I will trade this again tomorrow with you. I'm not in anything at this point. I want to say thank you for joining us today. Please like and subscribe to these videos. Please consider, if you're making money, please consider helping to support the channel. It's expensive to run these. I'm here with you most of the day, and I'll get back with you. I will be on tomorrow. I promise you guys. What I'm going to do is just keep it the same old way. It's just free. I'll be here with you guys the days that I can be. I appreciate you guys showing up today. I wanted to say that to you guys. Anybody was here today? Winky, my brother. Good to see you, my brother. Yeah, we got exactly, dude. We should start seeing companies pre-announce next 2 weeks. Winky thanks for saying that. Thanks to all you guys for showing up today. You guys made some money today. Fuck yeah. Good to see you, Market Rebel. Kim, good to see you. Botchlin, good to see you. Captain Rich, good to see you. Avery Ridge, Winky. Good to see everybody out there that's here today. A lot of old faces, a lot of new faces. I hope you guys made money today. And I'll be back with you again tomorrow morning. I should be on by, I want to say at least 9:30 tomorrow. I'll be around there, okay? I'll try to be on for the open. If I'm not, I'll throw something up on Captain's Alpha so you guys have at least a start to the day. Dan, good to see you. Garrett, Blind Nest Owl, my man, good to see you. Or woman, I think you might be a woman. Crazy Boys, Little Jeep, Andrea, Dylan, Johannes T, Chet, and Chayton, good to see you. Jeremy, everybody was here today. Hardcore, brother. Good to see everybody in here today. So here, you guys got my next video. You saw my last video. You know that these are important when I make them. And I'll be back on tomorrow, okay? So I'll see you guys in the morning. I will check you guys out. Binky, my man. Hey, Winky, good to see you. Johnny 5, baby. Jess, if you're listening. Joey, if you're listening.
Seeing some press reporting on the ECB now after their impromptu meeting this morning saying the new bond scheme being discussed to come with loose conditions such as compliance with the Commission's recommendations.
Everybody's in here. Dougie D's in here. You guys all have a great afternoon.
The ECB will likely stress an aim to reassert fundamentals.
Avery, Stonks Anonymous. Good to see all you guys in here today.
And this conditions will be attached to a scheme designed to cap borrowing costs for the Eurozone's most indebted states.
I'll add you, Michael, I promise. I'm going to get in there right now and do it. Andreas, good to see you.
Before offering very little on the amount of details, just saying the details of the scheme are still being ironed out by the ECB.
Mark Brown, take it easy, my brother. Take it easy,
Similar to the
everybody out
statement
there.
from
You
the
guys all have
ECB
a
this
great
morning
day.
when they concluded that
Trade the rest
impromptu
of this market into the
meeting.
into OPEX. There's a lot of money to be made in the next few days. I want you guys to know that a lot of money, whole ton of money to be made in the next few days. I'll check you guys out tomorrow.